capital markets. We also have a mature financial services sector and strong institutions that function. South Africa is open for investments in industries as diverse as financial services and advanced manufacturing, energy and healthcare infrastructure, as well as mining. We are developing the value chains of the future with substantial reserves of critical minerals. We aim to be at the forefront of the green energy revolution. We have a competitive advantage in the production of sustainable energy technologies, renewable energy components, green hydrogen, and many others. Against the backdrop of poor economic performance over the past 15 years, as well as subdued investment from both the private sector and the public sector, partners across society should be ready to create conditions for growth and jobs. A year ago, we established a partnership between government and business to tackle some of the most immediate challenges facing our economy. Through a government-wide initiative known as Operation Vulindlela, meaning it's an operation to open the way. We have been driving structural reforms to unleash growth and to create jobs. Working together with partners in business and labor, we've made tremendous progress in stabilizing our country's electricity supply. Through regulatory reforms that we have put in place, we have driven massive private sector investment in renewable energy. We have established the legislative and institutional frameworks for a more competitive and sustainable energy market. We have undertaken immigration reform to attract more skilled workers and tourists. We're opening up our rail network and port infrastructure for participation by third-party operators, meaning the private sector. We are working with business and relevant agencies to implement the recommendations of the Financial Action Task Force to remove South Africa from the FATF grey list. The Government of National Unity is committed to sound macroeconomic policies that support inclusive growth, stability, and development. Next year, South Africa, as you might well know, assumes the presidency of the G20. The theme that we have chosen is that we should have solidarity, equality, and sustainable development. We will use our G20 presidency to advocate for increased investment on the African continent and across countries of the global south. We will continue to promote a global economic order that is inclusive and fair. We will continue to work with our partners to achieve shared and sustainable prosperity for all countries. The last few months have seen a renewal of investor interest in the South African economy. And this has been prevalent in both the local South African economic market as well as offshore. The message I bring to investors today is that this interest is well placed. South Africa is firmly on the road to recovery. Investments in South Africa are secure. Our business environment is also stable. This is supported by policy certainty and regulatory safeguards that we have. So in many ways, South Africa is open for business. Together, we can forge a path of shared success, prosperity, and progress. I would really like to thank you for your attention and wish you well in your deliberations. I thank you.
All right, of course, President Cyril Ramaphosa there encouraging businessmen and investors that South Africa is
there are business people here, you are all in business, you all love competition, and when you go to your strategic planning sessions, you are plotting how to destroy the competition, okay? And so what then happens is that in various jurisdictions, industries or even single companies would start approaching the ministries of trade and say, slap tariffs on this commodity or this good or that service because the others are doing it and I need protection. And before you know it, costs will be rising across the global trading system. And that is the fear coming out of Washington this week. But you mentioned this in terms of the impact on the inflation process. The other part of it is that this would have a negative effect on global growth because global growth thrives because of trade. And so if you think of the threat to the disinflation process, think of the tariffs and the protectionism that we see that also comes in various guises, and in a way very illogical, because you want access to the markets of other countries, but you don't want them to have access to your markets. So who do you trade with then, if that is the approach? And but there is another important institutional aspect that at some stage the World Trade Organization had their tribunals not correct because there are some countries, powerful countries, that are blocking the appointments of people to those tribunals. And when you have got all of these protectionist measures, what you need are the WTO tribunals to be able to adjudicate disputes. And if the powerful countries frustrate the constitution of those tribunals, then we have a problem in the global trade system.
Let's take one final question.
Everything is clear as mud.
Yeah, it appears so. Maybe, is there a question at the back?
Okay. Sure. My question is, with South Africa being a part of BRIC, what is the government's calculation in terms of the possibility that for reputational risk, some American investors may be concerned about investment in South Africa? Is that a concern, or do you think it will have no effect at all?
I've not had those concerns. I thought that in BRICS, the other letter stands for Brazil and India and China and Russia. And if there is concern about the S, there must be a concern about BRIC. But there are more countries that had come in to form part of the BRICS. And we have not picked up these things. And there are ambassadors here. I think that the question you wanted to ask was about the R, but since you didn't ask it, let me just leave it.
Governor, if I can ask everybody to join me in thanking you for what is always a profoundly insightful and very interesting presentation of ideas in a very interesting time. Thank you, Governor.
Let's get those selfies in while we can. So I told you it'd be really dull and boring, right? The Governor of the Reserve Bank, Lesedi Kganyago, thank you, and the CEO of the Johannesburg Stock Exchange, Dr. Leila Fourie, we do thank you for that discussion. So from monetary policy to South Africa's fiscal policy framework. Our next speaker is a political economist who serves as the Deputy Finance Minister of South Africa. He has worked in different political and managerial government roles, including as Finance MEC and Director of the Local Government Department in the Limpopo Province. He was Chief Director for Economic Sectors and Industry, and also the Chief Executive Officer of the Automotive Industry Development Center under the Gauteng Provincial Government. He currently holds the position of Chairman of South Africa's Public Investment Corporation, an asset management firm wholly owned by the government. For this keynote address, please welcome Dr. David Masondo.
No, thanks, Sean. I suppose I'm the only speaker whose freedom of expression is highly constrained, because we've got the medium-term budget policy statement on Wednesday. So there's very few things I can say until the minister has spoken. On the fiscal policy, so you'll forgive me if you have some questions and I can't answer them. You'll have to wait for us when we come back for the investor roadshow after the medium-term budget statement. Why am I here? I was in Washington and I felt that I can't go back home without passing by here, particularly when our stock exchange is hosting this annual imported conference. We've been supporting them through and through. But I also feel that I can say something which is not too obvious, but relatively comfortable to say it even before the medium-term budget policy statement is announced. And what is it? Firstly, most of the world is experiencing low growth and high debt. And I will say a few words about how South Africa we're seeking to get out of low growth and how we're seeking to put our debt at sustainable level. And in doing so, I will just talk about the macro and the micro economic interventions that we are making. And maybe before I say anything, it's important that and I think the chairperson of the JSE, Mr. Nhleko, has already said how this political structure that we've installed, called the Government of National Unity, has really created political stability and certainty for investment. It was when we're constituting this after no single political party obtained 50+1 electoral support. As political parties, particularly the ANC, we had to say, how do we constitute this government and what are the principles according to which we've got to constitute this government? We said, A, respect for constitution, because our constitution is good and it's important for us to have the rule of law, respecting institutions, because that's critical for investments. The second area has been that anyone who supports the structural reforms that we've been undertaking, implementing in the 6th administration, they are more than welcome to join. And again, as the chairman of the JSE has said, the response to this political structure, GNU, if you look at our capital market, has been very, very positive. Our bonds, our currency have been very, they've responded very positively. Now, how are we seeking to grow our economy and attract more investment? The Governor of the Reserve Bank talking about the importance of having low and stable inflation, because if it's not stable, it becomes unpredictable. You can't plan as an investor. If it's too high, your export performance gets affected because what you'll be selling to the rest of the world will be too expensive compared to other jurisdictions, and households' purchasing power gets eroded, and our ability to sustain the grant transfer that we make as government, the purchasing power of those grants gets eroded. So at the macro level, that's one of the key one of the key pillars of our growth strategy. Now, from the fiscal point of view, we said it's important for us to put our debt at sustainable level. Debt in itself is not bad. The question is, can the economy sustain it? And secondly, what are you borrowing for? During my stay in Washington, we met the colleagues from Qatar, and they said, look, at some point, our debt to GDP was 100%, and we're borrowing for infrastructure. And they've since reduced it to 35% to GDP. So the question is, you are borrowing for what? So in trying to put our debt at sustainable level, there's three things, if not four, that we are doing, which we have articulated in the main budget, February 2024, and we seek to continue with that strategy. And that strategy is based on the following pillars. One, we said it's important for us to have a primary budget surplus. In other words, our expenditure should be lower than the revenue, and we've obtained that. Our primary budget surplus was 0.4% of the GDP. And we said it's also important for us to do fiscal consolidation, containing costs. We're not very popular, but we're not here to be popular. We're here to make sure that our public debt and our finances are at right level, but also containing, like I said, containing costs, but also cutting costs. But as we cut costs, we've got to do it in such a manner that we don't harm the growth enhancing investment, infrastructure in particular. So we're also trying to shift our expenditure towards infrastructure. And the minister, the day after tomorrow, he will be speaking to that. And by the way, it's for this reason that I'll have to leave shortly after this. So if some of you wanted to see me, to have a conversation with me, unfortunately, I'll have to fly out to go and join the team. And we do this to make sure, that is, in other words, putting our debt at sustainable level. It's in the interest of economic growth, because if we don't do so, our debt service costs, they're already doing so, eating into other imported expenditure. The debt service cost at the moment, the cost at 6% of the GDP. And secondly, if the debt is too high, if all of us, the state in particular, borrows the money that should be going to the entrepreneurs, it means that we'll be crowding out the private sector investment. And we're also aware that if the debt is too high, it generates sovereign risk premium problem. I mean, the yield is a good indicator on whether you are a risky jurisdiction or not. And of course, as investors, you're managing returns, but also risk. So if the yield is too high, the risk premium on the sovereign also get too high, and such destination, it's not attractive to any investment. And I think, as I said, our yield has been going low since the GNU, which is an indication that this political structure that we've put in place, it's in the interest of economic growth. Now, at a micro level, we've got a program called the Operation Vulindlela, which is a joint initiative between the presidency as well as National Treasury. And Rudy will go into detail on what we are doing in that regard. And perhaps, Governor, people should have, they were right in matching to the president, because to deal with the microeconomic interventions coming out of administered prices, we had to reform the network industries. It was not right that you had one supplier of electricity, of energy, which was Eskom, is still Eskom by and large. And we've seen what risks that poses if you rely on one energy source. And through Operation Vulindlela, we said, look, it's important for us to liberalize the energy market in order to allow the private sector to also generate energy. And Rudy will speak at length about that. But as we are liberalizing this network industries, energy, freight, logistics, we've got to invest in terms of the infrastructure and support entrepreneurs that are interested in operating in those network industries. So just to illustrate the point about the necessity and the need for us to raise capital to move towards these network industries, because many of these SOEs, their balance sheets are constrained, and the fiscal is also constrained. We don't have enough money to invest in the infrastructure as we open up these network industries. So, like I said, what we did, we said, look, it's important for us to liberalize the sector, the energy sector, and allow the private sector to invest in energy. And the infrastructure that we require for transmission, because the renewables are not in the geography or in the geographic space in which the transmission infrastructure was connected to the power generators. The new sources of energy, it's in the Cape and other jurisdictions, which therefore require us to have the infrastructure to get the renewable energy into the grid. And that requires a lot of money, and we don't have that money. So as National Treasury, working with our colleagues, we said we need to find creative ways to de-risk the private sector investment into this infrastructure, transmission as a starting point. So we now have, we're finalizing what we call a credit guarantee vehicle, which is meant to de-risk investment into the transmission infrastructure. I think we need around $500 million for us to get money into that guarantee scheme in order to de-risk any liquidity challenges or terminating challenges associated with the private sector or private capital being invested in the transmission infrastructure. And the National Treasury team will be leading government to talk about this at length. They will be embarking on a roadshow, particularly on this credit guarantee vehicle. And we're looking forward to you listening to them on how this credit guarantee scheme will work. We've put it together with the World Bank. And in my view, it is a very solid scheme. And we're going to use it as a pilot to start with at the transmission level. And if it is successful, we intend to extend it to other infrastructure programs, be it rail infrastructure and other important infrastructure in our economy. And also in metros, we're also undertaking a number of reforms in metros, particularly for the trading entities, waste, energy, and water, to enable those entities to borrow independently from the municipalities. So there are a number of things that we are doing to create conditions for the private sector to get money into the infrastructure. So in short, that is our story insofar as how we're seeking to get the private sector to invest in the South African economy. There is, as I said, the macroeconomic interventions that we're making, but also the microeconomic interventions that we are making, and we've started since the sixth administration through the structural reforms. And as we roll out the structural reforms, it is very clear to us we'll need a lot of capital to flow into the infrastructure to support our network industries. I thank you. Provided it doesn't require me to speak about Wednesday.
Want me to facilitate that? Happy to do it. Are there any questions in the room for the Deputy Minister? Before we release him, he's flying out. He said he can't meet you one-on-one, so this is your opportunity. All right, it looks like we might have to release you, Deputy Minister. Thank you. Doesn't seem like anyone's interested in asking you a question. I'm so sorry. And just to expand a little bit on the debt to GDP conversation, you'll be aware, Deputy Minister, that there's a conversation at the United Nations, the World Bank and the IMF about restructuring the international financial architecture, debt repayments in particular, because to quote the latest SDG report, some countries are paying more on their debt repayments than they are on investing in education and healthcare. And that, I think, is at the nub of the issue, at the crux of this issue. So countries cannot spend on implementing the SDGs, right? This 2030 agenda, if they do not deal with restructuring their debt repayments. So it's a very, very critical issue. I thank the Deputy Minister for that intervention. All right, we now move to our second moderated segment. So a few quick introductions. Our next interlocutor is South Africa's Minister of Energy and Electricity, a former MEC for Economic Development, Agriculture and Environment in the province of Gauteng, and a former executive mayor of the capital city of Tshwane between 2010 and 2016. He was appointed Minister of Electricity in March last year at the height of the load shedding problem in the country that not only dampened the economy, but literally darkened the mood of citizens across the board. I tell you, I can get my mother on the phone for you right now. But it does appear that we might have turned the corner, as our moderator will no doubt explore further. He is the current Deputy CEO of the Standard Bank Group, responsible for the group's Africa regions and offshore businesses. A respected leader with extensive leadership and banking experience, distinguishing himself in his ability to turn around struggling businesses and inspire teams. Talk about a match made in heaven. Please welcome moderator Kenny Fihla and Energy and Electricity Minister Dr. Kgosientsho Ramakgopa.
Thank you very much, Sherwin. Let me take the opportunity to greet everyone here in your eminence and just to acknowledge the presence of my peers and the leaders of business and just to thank the JSE for having occasioned this opportunity, creating a platform for capital and public sector to have a conversation around the opportunities in this instance that present themselves in the South African economy and forge ways of finding points of intersections and how best we can have a mutually beneficial relationship. And also to thank UBS for having been generous to host us here. Your generosity is highly appreciated. I'm going just to frame the conversation, just 4 slides, just to, if you like, surface some of the pertinent issues that are confronting us in the energy ecosystem in the country, but also elevate those areas that we think there could be significant participation of the private sector. I think the input by the president, the main address by the president, and also the opening remark of Sherwin does shed a light on the political context that we find ourselves in. The president makes the point that the May 29 elections ushered in what I refer to a moment of significant political consequence. And that requires that the major political actors, the protagonists, must find a way of working together in the interest of the country. And of course, the principal protagonist in that relationship, the African National Congress, found it appropriate that in the interest of advancing the objectives of transformation, development, and the achievement and attainment of, if you like, an aspirational goal of an egalitarian society, it's important that we are able to invite everyone, all the political actors, at least those who are represented in parliament, to sit around the table so that we can agree on a commonly shared future for our country, what we now refer to as a government of national unity. And I think that an important point to be made here is that it's not for the first time that the country finds itself in a situation where the political actors had to come together in pursuit of a common objective. President Mandela, during the first administration, immediately after the victory of the democratic project, he put together a government of national unity. Of course, the major distinction between now and then is that during President Mandela's era, it was not on the back of an electoral result. So essentially, it was not imposed by the electoral results, just an appreciation by the founder of South Africa's democracy that it's important that we come together around the table. And of course, now this is electoral, it's induced by the electoral outcome. And I think it's important, as I share with you what the priorities of the department is in the energy space, that we have an appreciation just of a bigger picture. So these actors then agreed on 3 priority areas. So the first one is to ensure that we achieve inclusive growth and we create jobs. And in this, by jobs, we mean qualitative jobs. The second priority is to fight poverty and ensure that we reduce the cost of living. And then the third priority is to create an ethical, capable developmental state. So those are the 3 priority areas agreed by all the actors. And that's what is going to drive, if you like, the work of the 7th administration. And the expectation is that each and every department must then articulate its plan in relation to those 3 priority priority areas of the 7th administration. So the framing is important. That whilst our conversation is a narrow conversation, at least now I'm going to narrow it on transmission, that we have a full picture of the backdrop, just an appreciation that we use multiple lenses to resolve this problem. So transmission is but one small part of a bigger question that we are answering. So I think identifying the problem statement and finding ways to resolve that problem statement is important. Now I'm narrowing the conversation, having given you what the political framework is. So the first one for our department is that we want to achieve a universal access, and there has to be, by universal access, the two sub-elements. The first one is the availability of electricity. So we know that at a grand level, if you like, at an aggregate level, we had situation where our supply could not meet the demand. So if you like, there was an electricity deficit. And once there's that electricity deficit, for us to protect the integrity of the grid, we initiated what we call load shedding. So what that simply means is that periods in the day, we deny the users, households and industry, their right to electricity. And that resulted in what the governor referred to as, if you like, dampening the economic prospects of the country. And this essentially is a structural constraint. And then the second sub-element is the affordability of that electricity. Of course, we have been talking about administered prices. Then we'll say something about that, but I'll articulate something also about what that ambition is. So, and then the quality of that electricity is important. So if you like, the first priority of the department addresses the second priority area of the seventh administration, that of reducing, if you like, the cost of living, but also contributes towards a growing economy. There is no economy that grows on the back of an electricity or energy deficit. So I'm helping to answer that question. Then the second critical area of that the department is to ensure that we attain both sovereign and regional energy security. So we have seen that in the region, there's an over-reliance on the capability and the capacity of South Africa over a passage of time. I mean, this is for historic reasons, and I will not dwell on those. And a lot of our neighboring countries are relying on South Africa to support them to meet their electricity requirements. So when South Africa had a major problem in meeting its own demand, of course, that had a ripple effect across the region. So we are coordinating our efforts together with my peers to ensure that we are able to attain regional security. Of course, that is anchored in large part on the ability of South Africa to meet its own demands. And I'll illustrate how transmission plays a critical role in that conversation. Of course, the sub-elements of that is to ensure that Eskom, which hitherto is a monopoly, continues to be a major player in the energy complex. I'm making that point because Eskom is a backstop. So if all other relationships goes wrong, bilateral relationship, private developer, private off-taker, if that relationship goes wrong, the default is Eskom. So Eskom is there to protect the South African economy and to also protect national interests. We've got a progressive, if you like, social wage in our country. And one of the elements of that social wage is a provision of free basic electricity to poor households in the quest of ensuring that we resolve the issues of the cost of living. There is no business that will pursue that agenda. It's altruistic. So there's no one who will volunteer to provide electricity for free to the poor. And that's why Eskom is important in that conversation. And of course, there are new frontiers of opportunity, the green hydrogen agenda. We're sitting with considerable endowments in the country. And I think those have not been fully exploited. So if you think of the minerals that are going to support the new electric vehicles, what I call the battery economy, a large part of that is found in the country. Cobalt, lithium, rare earth elements, the PGMs, they're located in the country and neighboring countries. And then we've got the best irradiation levels. If you had to do a wind atlas, some of the best quality wind. So money can't buy you those endowments. So it's important that we must not export our natural endowments. We must find a way of exploiting that. And you know that green hydrogen as an energy carrier is going to help us to resolve the hard to abate sectors. Of course, the price is not attractive now. I think it's about $2 per kilogram. And for you to reach a sweet spot, you must be below $1 per kilogram. We are far from that but some of the major industrialized countries are prepared to pay a premium and want to exploit our endowments. And of course, if you look at the taxonomy of what came out of the language of the last meeting of the G20 and on the last COP, we have come to accept that nuclear is green. Something that has puzzled me over time. As an engineer and a scientist, I've always known that nuclear is green, but there's a sudden discovery that nuclear is green. So it's something that we need to pursue in order to resolve this question. And of course, what is central at this in this conversation is availability of transmission. And I'll show you a map as I move towards the end, the misalignment of our renewable assets and also the concentration or the density of the grid. It's a historic thing, and I'll explain it when I get there. And then we must drive industrialization. So on the back of the work that we'll be doing, this massive investment in transmission expansion and modernization, our computation suggests that they will need anything in the order of magnitude of about $23 billion to drive 14,000 kilometers of new lines and modernization. The sovereign balance sheet is compromised for reasons that the governor and the DM has articulated. Of course, we're in a recovery mode. The ESCOM balance sheet is compromised. So we need to tap into the liquidity of the private sector. And hence, part of the reasons why we are here to make a case why we think you should be investing in this area. And then there's issues around the demographic, the gender and the youth elements of the work that we are doing. And the fact that we want to reasset, if you like, South Africa's position as a major player on the continent and also in the globe in relation to the issues of energy. So what are we doing? So we have accepted that we need an overarching plan that's going to articulate in the most emphatic fashion how we see the energy complex going into the future. So if you like, the political economy of energy is going to be anchored on three things. The first one is the integrated resource plan. What this is, the IRP, is a broad articulation of the fuel sources that are going to support the energy generation in the country and therefore the growth question in South Africa. It answers the question, what is that fuel source? And what is the cost of that fuel source? And having done that, we throw that into a model, and then it churns out what should be the share of the respective fuel sources. And you will see that the renewable energy sources are going to increase their share of the mix, is going to increase exponentially. We are a fossil fuel-based economy. About 88%, 90% of energy generation is coal-based for obvious reasons. We have committed to the nationally determined contributions. We said we are going to reduce per annum anything between 350 to 420 million tons of CO2 equivalent. And then we have also done the numbers there. What are the interventions? Three broad interventions. Electricity contributes 44% of those emissions. And then there's vehicles, and then the opportunities on green hydrogen. And then we went further to say that for us to be able to achieve that, so we then identify programs and projects to support this transition. We need about 90 billion US dollars to achieve that. About if you are okay, about 70 billion US dollars to achieve that. We are not sitting with that money, and that's why we need to have a conversation with capital. And then this will also be anchored by a gas master plan. We have accepted that gas is a transitional fuel source. By that, I mean that the emissions associated with gas are half of those associated with coal. So we're not just going to rush to just green our economy. We accept that it's going to be a stepwise approach. Gas is also a base load. So as we are going to remove 10 gigawatts of coal-based generation, it must be replaced by something to allow the South African economy to continue to grow. This momentum that we've built is not going to be resolved by renewable energy, wind and solar, because of their technical deficiencies. They are intermittent, non-dispatchable. So it's important that you replace that with base load. We are about to hit a gas cliff, and I'm sure the panel later will share with you. Working ourselves and Sasol, which is a major gas player in the country. Gas is responsible for industries that they contribute about 5% to the South African GDP. So it's in our interest to resolve that question. So we're talking with some of the colleagues in this room. We've started the discussions when we're in Washington ourselves, Sasol and ESCOM, to see how best we are able to protect South Africa's interest and continue to have the molecules to help us to keep this energy complex to support the South African economy. The third anchor is petroleum. It's not here because it's residing in a different ministry. And then we have agreed that there's a set of matrices that these plans must satisfy. The issues around energy security are important. Those of you who follow the COP, you know, they talk about the energy trilemma. The first one is to address energy access. It's an important point in the South African and African context, because 600 million people on the continent don't have access to electricity. So it's the biggest part of our conversation on the continent. And South Africa is a leader. And as part of our stewardship of the G20, we are going to foreground that as an area of interest, so that the major industrialized global economies can contribute towards the attainment of this. The other part of the trilemma is about the energy security, and then the third part is around sustainability. And of course, we say that what these plans must do must resolve on all of these things: affordability, supply, reduction of emissions. So it's not a binary conversation. We are of the opinion that you can achieve all of this at the go, and that's what we are doing with this plan. And then we have accepted that for us to resolve the energy deficit, we needed to place a lot of effort in getting ESCOM right. ESCOM hitherto has been a monopoly on the generation side of electricity, transmission, of course, 50% on the distribution, because the Constitution does make the point that the municipalities play a big role on the distribution side. As Deputy Minister Masonda was making the point, we put our eggs in one basket. So if ESCOM fails, it drags the economy with it. So we're de-risking that. We have introduced a set of reforms. I'm sure Rudy will expand on that. And then we have made sure that we introduce guardrails to protect and advance these reforms. And the best way of doing that is in the form of a legislative instrument. So we've amended the Electricity Regulation Act, which is an umbrella legislation that governs how the electricity and the electricity ecosystem in the country. We have reformed it now by law. We're allowing new generation capacity. You don't have to be licensed by the regulator. You simply register. So we've liberalized that. And as a result of that, we have seen that 66 gigawatts of new projects are coming from private sector. What does that tell us? Is that there's an insatiable appetite by private sector to participate in this space. What is the limiting factor? Is the absence of transmission. And that's why transmission is indispensable to the energy fortunes of the country, and by definition, the economy of the country. I've lifted the role of ESCOM. ESCOM, like I said, is important, is a backstop, is a default. If everything fails, it's ESCOM that must save the South African economy. And with a renewed leadership there, more visionary, a bit more plausible in the manner in which they see these interventions, but of course they are also ambitious. So we see ESCOM continue to be a player also on the renewable side. So what does this transition tell you? It tells you that as I speak to you now, about 84% of our energy generation is fossil fuel based. Of course, we are the only country on the continent that has got 3 active reactors. 2 of them, they give us power. The other one is isotope for medicinal purposes. Egypt is coming on stream. Once they finish their nuclear power station, they'll be the biggest from a power position point of view. But our position as a nuclear leader technology is unassailable on the continent. I keep on reminding my Egyptian counterpart that nuclear is not just power, but there are other uses, and we are leaders in that space. Of course, we are jealous. We want to get to a stage where we are better than them from the megawatts point of view. So what is the story of ESCOM? Accept that we must green our generation capacity. You can see when we go to 2030, the share is becoming greener. And that greener simply means that we are drawing a lot from solar, battery, as a storage, solar and wind, and then battery. Because when you put that combination together, it's going to approximate your base load condition. During the day, solar is, we get the best of that resource. In the evening, towards the morning, we get the best of wind, and then we need to store that. And then we can use batteries in periods where we don't have quality, if you like, generation from PV and or from solar, from wind. And in that way, it approximates the base load conditions. We think that will be 22% of the mix. And then going into by 2035, in the next 10 years or so, it will be 32% of the mix. But the story that's not being told here is that we are not going to achieve all of these things for as long as we are not able to resolve the transmission question. So what is the transmission question? So that's the map of the country, the southernmost tip country on the continent. So what do we know? So given the what ESCOM was really created to provide electricity to industry. That's how it was conceptualized over 100 years ago. And then they wanted to find cheap coal, and coal that is not of the best quality. And the discovery was made in the northern eastern part of the country there. That's where you have the highest density of coal-fired power stations. So how does science engineering work? Because you want to minimize technical losses. You construct your power stations at the mouth of the coal mine, the mouth of the source. And then you also don't want these electrons to travel long distances. So you place your load closer to where generation is. Load, I mean consumption, so industry and all of that. And that's why 72% of the load is in the north. But now we know with the advancement of technology that you can generate electricity from the sun and wind. But those resources are located in the southern part of our country, if you like, the Eastern Cape and the Western Cape provinces. So there's a misalignment of your renewable energy resources and also transmission. And then we have found that we need about, to connect about these resources, we need about 14,000 kilometers of new lines. So I said that at the current going rate, we think we need something in the order of magnitude of 23 billion rands for us to be able to achieve that. We need to build 14,000 kilometers of new lines. Just to give that into context, over the past 10 years, we only built 1,400. We want to build 14,000. No, Skawara, 5 minutes. I mastered the time. Don't worry. I'll time myself. I'm a lecturer in another life, so don't worry. My students know I'll keep to time. But thank you for that. So you need to grow it by 325%. So both you need to build an industry that must support that. I did make the point earlier on that you must industrialize on the back of this ambitious program. I mean, it's the single biggest build program of a post-apartheid era. So it's important that the fruits and the dividends of this program must be shared internally in the country. So you need to build industrial capacity to support that. We're having that conversation with the private sector. And then we need the money to support this. And one of the things that we have identified is that in some instances, you don't need new lines. You just need to increase the capacity of the existing infrastructure, the substations. And what we are sharing with you is what can be derived out of just increasing the capacity of the substations. We think we can unlock 13 gigawatts. Our intention is to unlock 11 gigawatts by 2027 and about 30 gigawatts by 2030, and that goes to about 50 gigawatts, of course, 2035 or so. So that's really the model that we're thinking of. And if you come to think of the lines that we must build, we have identified the corridors that needs to be built. So we think we can expedite about 22 projects that can give us 22 gigawatts. So what is the biggest ask? As the NTCSA is in place. The NTCSA is a natural monopoly, if you like. So we've set up a company just on the transmission side. From their own balance sheet, it can fund about $6.5 billion US dollars, and that will give us about 11 gigawatts by 2027. Like I said, 30 gigawatts by 2029. But we need significantly more. So there's a on-balance sheet financing and then off-balance sheet financing. DM Masondo did speak to this, that we are looking at instruments to enhance this, if you like, credit enhancing instruments that don't encumber the sovereign balance sheet, that don't encumber the NCCSA balance sheet, but that are acceptable to the market. And that's why we're talking with the market, and the DMSC has correctly mentioned, we'll do a particular specific roadshow that is simply for this area of work. But the point we're making is that what we are doing is not novel. It has been done in Brazil, Colombia, and other parts of the world. They've gone the route of concessioning particular corridors through the Independent Transition Programs Office. We've got a template, something that is akin to what we are thinking. We have done that on the power generation side, the Independent Power Producer Program. We have had a dispensation introduced. We think we can take that template and extend it, export it to the ITPO, but give it the necessary characteristics and features that meets, if you like, the unique requirements on the transmission side. So we're looking to your participation, and we're confident that engaging with the market in this way, we're going to tap into that liquidity. We can help South Africa to reassert its leadership in the energy complex and ensure that we meet our nationally determined contribution, and then we pull the rest of the continent with us. Thank you very much, Shewen.
Well, thank you very much, Minister, for that excellent presentation. You have covered some of the questions that I thought I would ask, so I would not go into those, and we'll try and deal with some of the issues that you would not have covered. It's quite an ambitious plan. I mean, if one looks at the energy transition, moving from 84% to 54%, reducing to 34% of fossil fuel within a very short period of time. I mean, does the country have the institutional capacity? I mean, I'm not just talking about ESCOM in this instance, but think about the material that's required, the cabling, the infrastructure, the steel, the companies that ought to be awarded tenders, build, install, and so on. If you may reflect on that, I mean, that's the first sort of question. I mean, how are we going to bridge the institutional capacity to be able to execute within such a limited period of time?
Now, CEO, your observations are on the mark. So we have accepted that there are significant limitations in this program. And we think that if we don't address those, it can be fatal to the program. So it will be a height of folly for me to sit here and suggest that we are going to implement this seamlessly. But at least we have identified and flagged it as a risk. First is that we know that the country has over time built a significant industrial capacity. The talent is there, and I think what had happened over a passage of time is that with an economy that is underperforming, there's been capacity utilization of some of the major players that they contracted, and in fact some of them have been displaced in the South African, if you like, civil and engineering space, and if they've gone to different jurisdictions. And that's why parallel to this, we're having an honest conversation with the industry on how best we can be able to localize the benefits of this and ensure that we don't pay a premium as we roll out. So first is that we have set ourselves a program on the ambitious side. There are inherent risks in that. We're engaging with the private sector players, but we also accept that we are going to achieve it over a period of time. So it's a stepwise approach. I mean, as we start, some of the major transformers, just to give you a sense that we only have one industry player that can manufacture the capacity or size of the transformers that we need. And that player has gone through some challenging times as a result of an absence of a credible program. So we do accept that as you start, you need to be importing from somewhere, and it's highly likely going to be China because it's a major player in that space. So we accept that. So we'll say that it will take us perhaps 3 to 4 years for us to achieve the kind of ambition that is required. But I think what is also going to be a necessary assurance to be given to private sector is that the program is credible. What do I mean by that? Is that it's not a stop-start program. So there's a see-through of what the demand will look like, and the state will stick to that demand. Because I'm sure there will not be any private sector player who wants to redirect their money to investing in the South African economy into a program that is not credible. And after 3 years, then we change course, we say we're not proceeding. So it's important that we stay at it. We're able to illustrate that we are genuine about this program. And then it will be supported over time by legislative instrument. But as I speak to you now, there's a premium to be paid, and those benefits will not necessarily accrue to the country at the rate at which we desire. But we are accepting that there is a weakness in this program, but we must make a start. That's why it is important. We have to start with this program, and then we'll build other blocks going into the future.
No, thank you very much for that, Minister. I mean, the opposite, I guess, of my question is that this is also an opportunity, isn't it? To rebuild our own production capacity, manufacturing, our own construction sector, and so on, accepting, of course, that that won't happen over a short period of time.
Yes.
But nonetheless, it is still an opportunity. Just to sort of go to an issue that would have been spoken about by the governor, the deputy minister, you also spoke about, I mean, in your own sort of speech, the whole issue of the price of electricity in South Africa. I mean, if one looks at what has happened to electricity prices, say from 2007 to 2022, I mean, increasing by over 600% relative to the inflation rate. Given the funding constraints and the requirement to enable this energy transition, it would seem to me that the country is between the rock and the hard place. I mean, how do you see, I mean, that gap being bridged?
You're absolutely correct. So I think it's a difficult balancing act. Well, first is that the situation is untenable for exactly the reasons that you have mentioned. 650% increase over a period of 16 years. I think that's going to undermine the competitiveness of our industry, is going to erode the quality of lives of households, and it will have a disproportionate impact on the poor, considering the share of the income that is spent on purchasing utilities. But we also accept that the ESCOM and the board have got a fiduciary responsibility to protect the interest of the entity and ensure that there is a going concern. And they have our full support there. And then on the one side, I did say that the third priority of the second priority of the seventh administration is to reduce the cost of living. And then the first one is to ensure that there is an inclusive growth. And I've made the point that there is no economy that grows with an energy deficit, but also the kind of increases that are being suggested is going to undermine that agenda. So what are we doing? So ESCOM will proceed to make its application. And as you know, I mean, just to the audience who might not be familiar with how administered prices work, there's an independent institution called NERSA that evaluates the submissions of ESCOM. So at no point is the minister involved in that process. But the minister, the state, holds the monopoly over policy instruments. And there is part of that submission by ESCOM that can be resolved by a policy intervention. And to the extent that we can make that intervention, we will make that intervention. I can't, for reasons that the GM has mentioned, we are engaging with the National Treasury, but we are confident that where we are seated, ESCOM will still have, the net effect of that intervention will not be adverse to ESCOM. Because remember, ESCOM doesn't care how they get that money, whether it's through a transparent process. That transparent process is in the tariff, or it's a non-transparent process support. So for ESCOM, we have made the point, at least where I am, Their interest will not be diluted, but we're also going to protect the interest of the public. I'm confident that we can do both. We're engaging with the National Treasury to ensure that we meet both the interest and obligations of ESCOM, and we are able to keep to our promise of ensuring that the country's economy grows, that we are able to protect the poor. You will see when the final tariff is announced that, in fact, we have resolved both questions. I am more than confident that it can be done.
Well, you are reassuring, Minister, and I can see Dan smiling. So it means he also got something, which is also encouraging. That there's some balance that has been struck that acknowledges the challenges, yet at the same time also takes into account, impact on people, on the economy, and all of those
Absolutely,
issues.
yes.
Just to go back, Minister, to an excellent sort of achievement that you and the team at ESCOM have been able to achieve, i.e. no load shedding since April this year. Some skeptics will still wonder whether the underlying issues have been fully resolved or whether there's a risk that some of them could come back to bite us. Apart from, no, this is a political gimmick that's meant for the election, just objectively, are you comfortable that the fundamental issues that resulted in load shedding in the first instance have been adequately dealt with?
No, I'm more than confident. So there are two thematic areas. So the first one are the technical and engineering issues. And in fact, today, for the record, we have registered the lowest unplanned capacity loss factor, just in colloquial terms. What that means is got two elements. The first one is the reliability of the units. By reliability, I mean the units just don't fail on their own. And the second element is the efficiency of those units, the ability to which these units are able to generate their design capacity. So you really want to maximize the optimal nature of the performance and then also ensure that these units are on load. Once you resolve those, then it means you bring down your unplanned capacity loss factor. So today we are just 8,100 megawatts, 7,300. So that has not been achieved, I think, over the past 6-7 years, 4 years or so. So I'm just saying at the technical, it's a record today. Yeah. And how that record was achieved is that, just to give you maybe one or two examples. The first one was for the team, the engineering team, to the technical team to say that which are these units that are responsible, or power stations that are responsible for the unplanned capacity loss factor. And they realized that 6 of the 14 power stations, they are accounting for 73% of the losses. There is something in science engineering, when I studied engineering, they call it the Pareto principle. So for 20% of the effort, there's 80% return. So we said, no, it's fine, let's focus on these 6 power stations. And today, as I speak to you, those power stations, 3 of them are some of the best performing power stations, and they've taken us out of this situation. So money alone won't help you to resolve the problem. Like I said, is a engineering and technical problem, and it requires engineers to solve it. The chair of the board of ESCOM is an engineer. The CEO of the ESCOM group CEO is an engineer, and the minister happens to be an engineer. So we remove the politics, we resolve the technical problem. That's the point I'm making. The second thematic area is leadership. Leadership is important. Alignment across the executive authority, the board, and also the executive management team. So what did the board do? So first is just the quality of that board. I say to a lot of people, just give yourself time and understand and analyze the qualifications of the board that we have put there. Some of the most revered and celebrated engineers, accountants, lawyers in their field, respected. So we pull all of those together. They raise their hands and say, we want to be counted to solve the South African problem. And then they appointed the most tried and tested engineers, the group CEO, Mr. Marukani, the head of generation, Mr. Beking Numalo, the head of distribution, Mr. Monde Bala, and the acting CEO of the transmission, Mr. Sokomoto Skepers, some of the most respected engineers in that space. And then hands off, do as you wish, as you want, we'll give you the kind of support. And guess what? We're beginning to see the kind of progress that we're seeing. So this is not by accident. I make the point, has been orchestrated. I once said that we have achieved this monumental milestone. It's not an act of God, and my priest was not very happy with me. So
I
will
can
not,
see your rosary.
yes, I will not say that again. But all I'm saying is that it was orchestrated by the team.
No, that's very encouraging, and I hope Dan is in the office. And this is the Notice site in May. We a couple of years back went to meet with the leadership at the time. The office was dark. There were very, very few souls in the office, and I thought, well, it's because of load shedding. So as soon as you got people to understand that they have to be in the plants, hitting the transmission line, the generation plants, the generators, and so on. I mean, there's no way you can solve these problems working from home. So it's encouraging. And engineers understand that.
Engineers understand that.
Then the last question on my side, Minister, I can see that our handlers are already pacing up and down. South Africa will be hosting the G20 summit, and this is an opportunity to also influence, I guess, some of the global players who have massive sway on the availability of funding, as well as on creating access for South African produce onto their market, which has a massive impact then on our economy and so on. I mean, how do you think you'd be able to leverage, the opportunity there, firstly, to deal with some of the funding commitments, translating into actual flow of money into a real project, and then secondly, ensuring that South Africa is not shut out of some of the export markets like Europe as a result of these, carbon border adjustment mechanisms and so on.
No, you're absolutely correct. So the first point to be made is that it will be for the first time in the history of the G20 that is held on the African soil. So we see ourselves as an advocate for the continent. And I made the point earlier on that the 600 million people who are not connected to electricity. So there's extreme levels of energy poverty on the continent. So we have agreed that as part of the energy work group, we are going to lift the issue of energy access as one of the preeminent features of the South African leadership of the G20. And in fact, it's find expression in what we call the priority. I think we've set ourselves 3 priorities. So there's got manifestations of, if you like, energy access. The second one is just to accept that the major powers, the industrial north, I think they have not come to the party in relation to the commitment that they've made at the various COP. And that's why the current COP in Azerbaijan, the focus really will be around the financing. I've shared with you, we think that we need 1.5 trillion rand, so if you like, $70 billion or so, for us to be able to support the kind of transition that is required. We are not sitting with that money. Of course, the International Partners Group, which is a collaboration of major industrialized countries, have put together an instrument to the tune of $12.5 billion, and I'm sure Rudy will expand on that. And we're seeing how best we can access that. Inside that instrument, part of it is concessional, and some of it is grant. Having said all of the above, we think that is an existential problem for our industry. You make the point that Europe is going to introduce the carbon border adjustments, or the finished products that comes into the European area must account for how they were produced. If they use fossil fuels to manufacture them, they are going to levy, if you like, a tariff. We are arguing that there is a trading instrument but they are arguing differently. But essentially what that means is that our cement industry, our steel industry is going to lose market share amongst others, and is going to undermine our priority number one, grow the South African economy and create jobs. That's why it's in our interest, whether the facility is there or not, we have to transition. We must find a way of financing outside what the powers are providing. And that's why, as DM was indicating, we're going out to the market, engage with the market to see what is an acceptable credit enhancing instrument outside the sovereign. And we've been advised that, as the DM was saying, these conversations have matured. There are instruments that could be acceptable. We want to exploit those, and hence we are here, and hopefully with the bilaterals we'll have here, we'll find a way of how best to design that bespoke instrument to help us to transition. But transitioning we will. Whether the money is there from the industrial powers or not, it is in our interest to do that. And I did make the point, transmission is a key part. The endowments are there. So the US, these major Western countries, they are not sitting on the endowments. The quality of the sun, the amount of the real estate, that's not there. And that can be exported. It's just a location advantage. God chose to place us there, and he gave us the resources. And it's how best we exploit those. We accept that we have to work with the private sector to help us. And we're hoping that part of this conversation will culminate in getting to a stage where there's an instrument that is acceptable to all, and we can roll out that instrument in the country and then get the benefit of greening the South African economy. CEO.
Great. Thank you very much, Minister. I guess let's check if there's any question on the floor. In the interest of time, we'll probably take only one or two. If there's a brief question. You seem to have dealt with the issues, except, oh, there's one.
Thank you very much, Minister. This is Igor Arsenin, UBS Asset Management. I have a question about nuclear part of your program. And I recall in the previous administration, there were some plans, and there is a pretty substantial price tag on this. Is it something which is far away in the future, or you have any concrete plans for this, and how you plan to finance it? Thank you.
Thanks for the question. No, you're absolutely right. I think there were ambitions previously to procure, is it 9.7 gigawatts of nuclear. And of course, that process was soiled by politics, and we then come to know when we went to the Zondo Commission. So President Ramaphosa put together a commission just to evaluate and understand what we come to refer to as state capture in the country. That in fact that the program was also mired by allegations of corruption. So what we seek to do is to ensure that from a process point of view of procuring nuclear, the process is transparent and is clean. We had gone out to say we want to procure 2,500 megawatts. We have since understood that that program also had its own challenges from a process point of view. I've pulled it back so that we clean the process, so that when we go out of the market, we're able to illustrate every step of the way that is transparent, there's nothing to hide, and in fact is to the benefit of the South African economy. By ESCOM's calculation, they think that the nuclear build program should be more ambitious than just the 2,500 megawatts. You see the slide I showed you, by 2035, 32% of generation capacity will be coming from PV and solar, and of course a combination with battery storage. And the success of any program of that nature is reliant on the redundancy of base load. So nuclear, like I said, in the taxonomy now of the G20 and the major multilateral bodies, we consider that to be clean. So that's the route to go. So we will be going the nuclear route. And then the second part to your question, is that affordable? I'll be announcing in the next 2 weeks a team of eminent experts that I've drawn across the world that are going to help us to answer the question, the pace and scale that we can afford. Because the last thing you want is to have this massive bill program and find that you are going to, the pass-through cost will go to the end consumer. It becomes unaffordable. So the electricity is there, but very few people can afford it. So we'll go that route. We'll announce eminent players in the space, and then they'll advise on that, so that you undermine any accusation that the process is incompetent in multiple facets, the process is corrupt. So like I said, we're cleaning that. Every step of the way will be transparent. But yes, nuclear, we convinced is going to be part of the mix. There is no country in the world, and they will never be going to the future, that is powered by solar and wind. So I think it's important that we have an appreciation that we are talking about the mix and not just the one fuel sources over the other. Like I said, gas is also a transitional fuel source. We're going to elevate its contribution. We're looking at anything between 3,000 to 5,000 of gas to power, at least in the next 5 years or so. But it's important how we finance that, and that's the work that Dan and the team are working on. And of course, Sasol as the major gas consumer in the country. But the answer is yes, we'll clean the process and answer the question, the pace and scale that we can afford, CEO.
Well, Minister, thank you very much. We do not want to see you being kicked off the stage.
Yes, yeah.
But thank you very much for an
Thanks,
excellent
Martin.
presentation
Thanks,
and
Martin.
for engaging with us.
Don't forget the selfie. So our thanks to Kenny Fihla and Energy and Electricity Minister Dr. Kgosientsho Ramokgopa. And so from acts of God to acts of engineering, I shall now act in the best interests of everyone in this room and suggest we take a 15-minute leg stretch break and reconvene here at about 11:40. You're welcome. Just wait for more people to come in. Look at this. No. You ready, sir? Ladies and gentlemen, please take your seats. We're about to begin. Please tell a friend outside that we're about to begin. Welcome back, everybody. We now move to a segment on South Africa's structural reform program and an address by the head of the Project Management Office in the private office of the South African President. He is responsible for supporting the implementation of the Presidential Employment Stimulus, the Presidential Youth Employment Initiative, as well as unblocking regulatory challenges that impact employment and economic growth. Our speaker also jointly leads Operation Vulindlela, Mr. Vulindlela himself, which has been established as a joint initiative between the Presidency and National Treasury to accelerate structural reforms. Please put your hands together for Mr. Rudy Dix.
The governor's just being plain naughty, you know. Please call me Rudy. I don't come with any other title. Rudy Vuli does sound quite nice, actually. Perhaps just before I say thank you so much, Sherwin, for that introduction and protocols, ministers, DMs. I think the one that should be called Mr. By the way, we forget that the one that should be called Mr. Vulindlela is DM Masondo. Because him and I started this thing together in 2020, and he was, Minister of Finance. Then I'd given him the responsibility, and we worked quite close. But that's a conversation for another day. I thought the Minister Ramaphosa's point at the end was quite an important message around the energy stuff, because if it is as he's expressed it, that is one issue that gives us the kind of, and the Gov, of course, give us the kind of positivity is the turnaround that we've done. There's a couple of, just put in context when he says unplanned capability loss factor is now at under 8,000. Last year, in the midst of winter, we were sitting at 18,000. Now compare that. That's the context you have to see, and then moving closer to 19, even 20,000 in some days when we were tracking that. This is before, of course, Dan had started as a CEO. Another milestone which is quite important in getting efficiency, as the minister says, is that in this winter that we've just seen in South Africa, we passed for the first time in also about 5 years, our maximum generation capacity of 35,000 megawatts. Now, we've not done that again in the last 4 to 5 years, and I think that's also quite an important milestone. So I think just giving a round of applause to the minister and to Dan and the team is phenomenal. And they would have not done that. It's a difficult thing I always say to both Dan and Sis Michelle from the GCU of Transnet that, the work that we're doing on turning around both those entities are done in combination and with the reform program. So imagine you're not just turning around an entity from a generation capacity or from a volume base. You also have to deal specifically with the reform of policies that we've taken many years ago, and therefore implement them sometimes 20, 23, 24 years later. So you've got a really tough job. You got the ministers, Ramaphosa on Dan, and ministers Creasy on Michelle, and then you have the structural reform program also pushing it along. And these are important combinations, and there's a confluence of different factors, of course, that allow us to be able to make sure that we do this. So, okay, I'm as blind as a bat, so I've got to see what's over here. Okay. So we've done this journey, and I thought it was quite important from an update that we've been spending a bit of time on this. So as we normally say, it's a joint initiative between ourselves and National Treasury, and that's a very important combination of getting the center of government together to work on the structural reform program. It's important to say that this thing started way back in 2020, right? So it's not a program of the new administration. It is something that the president had set out quite clearly as part of his term of office in the 6th administration. And before he got elected as the president for the 7th administration, he made it quite clear that he wants to see the structural reform program continue. And that's quite critical for us to understand. So many of the reform programs had started then and continued to move into this administration, and that's quite important. We also run with the ministries and quite closely on some of the interventionists, for example, the National Energy Crisis Committee and the National Logistics Crisis Committee. These are important committees that looks at two aspects generally: operational performance and supporting technical capacity to the leadership of these entities, not to run it, but to support them. And secondly, to support the reform program. Because as I said, they intertwine. They're quite important for us to be able to say that the reform programs around how we see this is quite critical. And so, of course, this is a unique model, Rudy Vuli, I think, as they say. We make things up as we go as South Africans, and we're quite good at that, right? And the model for delivery is something that we've homemade. It's something that we said it's got to be iterative, it's got to be delivery oriented, it's got to be getting into the weeds of stuff, having to ask through the questions that. So it's such a pleasure to work with Minister Ramaphosa, because one of the few ministers that asks the questions that has to tackle the weeds, so to speak. He gets into it and says, okay, tell us about this. What happens if you do this relative to that, and what would be the impact, and what is the risk that we have to manage? So it is about that. It's getting into the details and ensuring that we're able to support delivery, track, monitor, unlock, and have a performance management where we hold accountable. And accountability is quite an important part. I know that some ministers feel that it's sometimes quite embarrassing, but it is the nature of this particular methodology where we, on a quarterly basis, have committed since 2020 to provide public reporting on the OVA reform. And we've got a dashboard that you generally see, and it's publicly known, where we track and basically indicate quite clearly this is what we've achieved, this is what we've not achieved, this is what we're progressing on. And that's, again, just the transparency and accountability from the presidency and the work that we do with different ministers going forward. So that's quite critical for us. I'd ask the team, so come, let's just kind of measure and see what impact we've done. Right? Because if you're an economist like some of us over here, you know that these things don't always play through the economy quite quickly. They take a bit of time, right? But we did ask the question, given that when we did the reform that the minister had spoken about on energy, when we did the Schedule 2 change, of lifting the cap and allowing generators who established their generation capacity and had off-takers in the private sector to evacuate the electrons on the transmission network, what happened? Because we've got some interesting data on whether that impact has fell through, right? And so we asked this question, and generally the impact of reforms, we gave ourselves a 94%, and of course, some of you may say, okay, well, that's not a good, is that an A plus, right? Is that an A plus, Jan? Okay, you can look at it and say it may not be the case. We've clearly, just on the modeling that we've done, we estimate that it's over 500 billion rand worth of investment. Some of that would still play through the economy over the next 2 to 3 years. 90% of that is 400 billion, which is largely the 22.5 gigawatts of pipeline of private investments. Now, this is private investment. There are different figures, and I think it's important to understand that. The 22.5 gigawatts of private investment was what we track as a result of the change in Schedule 2. And we set up a project with the Minerals Council with Mzila, and Roger was then still the CEO, but we still do it with Mzila, who is now the CEO here, he's sitting over here. And this is what is registered in the Energy One-Stop Shop. There are, of course,
other indicators, for example, the photovoltaic and the wind association to an annual survey. It's the number that the minister referred to, which is 66 gigawatts of pipeline of development of renewables. That was 23-24 financial year. 22-23 financial year. They've run that survey again, and they estimate the pipeline projections, right, that they have is now 133 gigawatts, Minister. So that's a double jump, quite significant amount of jump. The point about this is that we've got to get it onto the grid, and this is the thing about it. So we want to see that 22.5 and 400 billion of that 500 billion new investment get on, and we see that already tracking in some of the data that we do see, particularly through NERSA and some of the other aspects. But what will happen potentially in the next 25, 26, 27, you'll probably see a significant ramp up until 2028, and that's really what we're looking at. 51% reduction in the cost of data for those who focus on the other reforms, which is telecommunication, Minister Molefe, and then 90 days of obtaining water use license down from 300. This is important to track because it has significant investment impact, particularly for mining, heavy industrial users who require a water use license, but had spent on the electronic system more than 300 days just to wait for an approval and authorization before they can either get to bankability or even decide on commercial operation date. So that's quite important in the work that we've done there. With my former colleague, by the way, Dr. Sean Phillips, who's now the DG of DWS, he understood how that was important. It was one of our first interventions, by the way, where we re-engineered as Operation Vulindlela, the water use licensing system. And we did a lot of back-end support with engineering help in trying to develop a new tech-savvy, more efficient system that was quite critical. And this is just the thing that I spoke about earlier on about the renewable energy and the private sector. And what we've done here is just track what Minister is responsible for in terms of the National Energy Regulator of South Africa. And as you can see, just look at 2020 to 2022 flat. This is projects that are less than 1 megawatt, or where there are projects more than 1 megawatt, they have to go through a very onerous licensing process. And then we introduce the change, and you see that exponential growth, right? And so, of course, we continue to see that. Now, it's slightly flat because in 2023, we've just got under 2,000 as a result of the new regime. We'll probably see a little bit more, just over 2,000 in 2024. And as I say, in 2025, in terms of our projections, we see significant doubling of the amount of registration that is required as permitting authorizations, grid access, and a whole set of other elements are important for us to be able to get that. So we then said, okay, cool, we think we're doing okay. A lot of work still be done. And then we had these academics from Stellenbosch, right? You know, academics, you have to be nervous about them sometimes. But this academics we liked, right? Because they said a good story. And this is from the Bureau of Economic Research. And they basically said, okay, let's model what these chaps are doing there in the presidency. We don't know what they're doing, but let's model it for the economy. And they did this independently of us. And they came up with a couple of things where they're saying, firstly, they reaffirmed the model that we had originally run when we said what we're going to identify, Gov, for the reforms. And that was your contribution that you've always made when you do your annual and your quarterly reports. You've got to deal with the structural reform. So we looked at the 5 structural reform issues, which you recall. So logistics, energy, water, visa reform, and telecommunications. And they said, basically, if we implement fully those phase 1, 94 to 100%, we get 1.5% on baseline. Now that's quite nice, right? That's really quite nice. That gives us a really good growth figure to build on, you know, but it requires full implementation. It requires steady energy supply going forward. They begin to indicate that we'll see gross fixed capital formation increase by 4%, right? That's also a good indication because that's real growth. It's not consumption driven, Gov, right? And inflation driven, as you would say. Oh, I shouldn't be saying that, Gov, right? Sure. And of course, energy access, of course, ports significantly improved and a number of things. So all in all, what it did show was that somewhere between 1.5 to 3% on baseline growth by 2029 would be that. Now it's quite interesting because we've been engaging with some of the banks, for example, and the banks have run similar models. And unlike Gov, they take an upside model. They take a more upside positive model of it. And it seems that there is a view that potentially South Africa could see quite a significant growth, probably starting next year of about 2.5%, 2.8%. Others had talked about 3%. I think one need to be cautious about these numbers. There are a lot of variables and factors that take it into consideration. But certainly, if you look at inflation, if you look at all the other indicators, particularly South Africa becoming quite a critical emerging market relative to their peers more recently, and the reform program, I think there are a confluence of many of these positive factors that could potentially achieve this kind of stuff. But this is their work. They suggest positively that if we continue the reform program and we do phase 2, then that could work, right? This is a slide that we've taken from our cooperation with the business collaboration, and this is what the president announced and we're working on. A bit more ambitious, but I think what the president had asked for us is to be a bit more ambitious about this. And so how do we work on ensuring we get the kind of 3% plus growth in 2025, by the way, right? And what are those variables and factors that we need to look on? So for example, energy, accelerating private generation, we got to do about 4,500, 5,000 megawatts per year between now and 2030. So over and above that, Dan and them has to ensure that we add that additional megawatts of generation, either procured by himself or we doing it through private sector. And I think that's quite critical. Similarly, around transport and logistics, we got to see how we support Michelle in getting the volumes up, but as well as, of course, the reform programs are there and private sector participation, and a number of other factors that are quite important. But this virtual cycle is quite critical because the sentiment about doing the reform, about some of the structural changes, the changes that we see in real terms in energy and logistics and crime, has an important positive effect on sentiment and the fact that when we say something, we're actually going to do it and we hold people to account. And of course, a positive impact on that is investment, jobs, and a whole set of other areas that are going to be quite critical. So I've not spoken too much on detail on where we're at. That is available and we can engage during the course of today or tomorrow, as many of you would want to meet with us to talk through. But where do we go to from here now with the new government and the new term of office? And so, of course, what we did say, and we call this the second wave of reform, we said that it's quite important for us to critically maintain 4 of the 5. Because largely telecommunications, Minister Molatse, I can't see Minister Molatse, okay. Okay. We've done that. We've done the auction, we've done the spectrum, we've done a couple of other things. But certainly, as Minister Ramakgopa has said, we've got to drive through a whole set of additional reforms in the energy space. Similarly in logistics, similarly in water and energy security. And of course, we've made huge strides in the last couple of months, which we started way back in 2020 around the visa. We then said we're going to add on 3 additional ones. Right? The first is creating dynamic and integrated systems to enable economic activity with a focus primarily on transport and transport integration and human settlements. And this is quite an important but complex reform, very complex. But it's part of creating that sustainability and addressing inequality. The second is a no-brainer, which is just digital transformation, and specifically focusing here on digital identification and digital payment systems. We did some of this in 2020, and certainly we can continue doing this as part of our reform program, building on some of the experiences globally, for example, what's happening in India, or for example, what's happening in Brazil, and this is quite important, working together with the Reserve Bank, with the payment systems, and a whole set of other people on this, and this is some tasks that we've already started. And the last one, which has been raised by business as a critical area, is that, we can do a lot of stuff at the macro level, at a national, countrywide level, but if we don't have our local government systems functioning adequately, we fail to get that investment realized at a local government or at a municipal level. So this is quite important. Again, another complex reform. We've got to be clear what we're going to look at to be able to ensure that it is positive and it has the kind of impact that's there. So what did we achieve in phase 1 of the energy one? Private investments, electricity generation. We've established the National Transmission Company as an independent entity, and it's fully operational and it's, it's trading. The Electricity Regulatory Act has been passed, introduce a competitive market system. Rooftop solar, for example, has more than doubled in 1 year. And we've created a world-class energy procurement program with over 10 gigawatts that we've procured since 2010, right? 2010. So this is important parts of what we've achieved. So what we're looking at for the future as we talk about this term of office, we've got to complete the restructuring of Eskom. And that is still an important part of how we create a competitive market space and developing an important next step, which is establishment of competitive wholesale market for electricity generation. And part of that exercise is developing a market code, working together with Eskom and the team, working together with NERSA and the colleagues from government departments in developing a market code. Now, this is like 20 years behind, right? So many of you who live in other parts of the world would think that, yeah, this is, we've done this, but this is an important part of our process of liberalizing and ensuring that we create a competitive market space for this. We will continue to streamline the regulatory framework for energy projects, and the Energy One-Stop Shop was one of those things. We think it's quite important to learn from that for other businesses in terms of investments. And so we're already replicating that in other parts of the sector to make it much more easy. An important area that the minister will drive is the electricity distribution sector. That's one of the local government linkages in terms of the reform. Because the EDI reform, of course, is going to be quite significant and important for us to deal with at a local government level. So it's in a sense, the bottom part of the value chain. So you have transmission, you have generation, or either way around, and then you have EDI. This is a complex front because powers in terms of law and constitution lies with municipalities. You have 175 registered distributors in South Africa. 45% of the distribution capacity is done by Eskom, with the rest done by those 175 distributors. For the size of South Africa's electricity distribution sector, you've got to think about consolidation. A lot of the work that was done in the early stages of the EDI reform that was eventually abandoned, that we've got to take up with right now. And of course, Minister had spoken quite a bit about the expansion of the national transmission network. Logistics, very much similarly in the challenges that are there, very different sectors, of course. Freight logistics roadmap we published, and Cabinet approved that in December 2023. And that's importantly because it sets out a clear path of the logistics reform, and that, of course, is available. We're working towards the draft network statement with Michelle and the team, and hoping to publish that before the end of this year. That's quite important. Again, like the electricity one, it's kind of something that many of you would think, okay, that you take for granted, because that reform of having a network statement that describes the state of the network and that sets out an access charge price is something that, okay, we've done this 20 years ago, but for South Africans, this is quite an important part of having third-party access on the network, that has largely been dominant and has a monopoly by transport freight rail. So it's quite critical for us to be able to do that, and we're working really hard in finalizing what already has gone out for public comment on the third-party access to be signed off by the minister and, of course, Michelle and her board. We've introduced some private sector participation in container terminals, although it's gotten to a little bit of a bump. I understand the Transnet leadership is dealing with us, and we should be able to get it back on track. Economic Regulator of Transport Act was also passed a few months ago, and that helps us to be able to set up a regulatory environment, given that we're introducing competition into the space, both ports and rail. And the private sector participation, importantly, working together with Michelle and the team around what PSPs could we introduce. Lots of interesting and conversations that we're having around potentially introducing over and above third-party access, private sector participation, something similar to either a JV in the way that potentially we could have gotten for the Durban Port Container Terminal Pier 2, concessioning, again, many models that are out there that are being explored by the technical teams to be able to get to market and to ensure that we provide that kind of correct signal. For phase 2, we've got to continue with this, right? So complete restructuring of Transnet. And remember, in the freight logistics roadmap, one of the principles, like in Eskom, is a separation from infrastructure from operations. And so again, similarly, we're driving through that separation through the formation of the Transnet National Port Authority in the port space, which is the owner of the infrastructure, versus TPT, which is the operator. Similarly, in the rail, Michelle and them have already created an operating division that started operating from the 1st of October. And that operating division, which is called TRIM, Transit Infrastructure Manager for the rail network, and similar TFR will be the Transit Freight Rail for the operations. That reform is the fundamental part of the reform program, and that's partly to create that separation that allows for private sector participation and competition in the operation space, right? Open access, I spoke about that relating to the network statement that we're going to try and push through and make sure that we get it out before the end of the year. But there's governance and procedures that we would have to follow. Private sector participation, I've spoke about it, establishment and fully operationalizing the transport economic regulator, and then finalizing the bill. I'll quickly go through the rest quite quickly because I'm sure you've got lots of questions. Water, again, if you take a value chain approach, we looked at raw water pricing, we looked at the top end and bulk water. So clearly a lot of it was dealing with the backlog of water use licenses, establishing the National Water Resource Infrastructure Agency. For those who understand the markets, for example, in South Africa, the National Water Resource Infrastructure Agency is like a SANRAL for water, if I do that comparison. It's running the infrastructure for the road SANRAL. The National Water Resource Infrastructure Agency will run the water and includes TCTA, right? The Trans-Caledonian Tunnel Authority, which was largely responsible for big infrastructure projects in the wholesale market. Water quality systems will continue to be introduced, and particularly to ensure that we do the blue drop, green drop, and no drop reports. This is ensuring that we have water services authorities complying with their licensing conditions. And then water partnerships are established to be able to deal with potential PSP projects in the water space. So again, for us, it's going to be the full establishment and operationalization of the agency, strengthening the regulation of water service provision, making sure that we deal with the distribution companies, again, at the municipal space. So we'll find that link here to municipalities around distribution and reticulation of water services, and ensuring that water services authority comply with their licensing conditions. And there's a support introduction of potential private sector participation. This is a bit more complex, as you can imagine, right? We've got to deal with the complexities of the MFMA and some of the arrangements around water, private sector participation, and the cost that can be passed on to consumers. These are some lovely work that we've done over here. We've done the comprehensive review of the work visa system. Revised immigration regulations have been published just before the elections. We've established a trusted employer scheme where we gave to OEMs, for example, to run their intra-company visa systems. V-Visa introduced in 34 countries. And then we've been able to reduce the backlog by 50% for the existing applications. And with the minister and the team at Home Affairs, we're working quite hard in supporting them to eradicate that backlog once and for all, and not have it perennially come back, because it does come back. So these are important reforms that are there to make it much more easier to attract skilled individuals and target select tourist markets, particularly the EU, UK, China. 100 million international visitors. We want 1% of that. India the same, right? So what we have done right now is that the minister has published the notice around the points-based system and remote work visa. And these are important reforms that started many years ago, but have finally been signed off and now published. We're also going to implement the remote work visa. So we're adapting our visa regime to the kind of changing nature of work and the movements that are there. Expanding the trusted employer scheme. And revolutionary, we're now at the cusp of introducing a electronic travel authorization. This is a fully, for many of you, travel. And ETA is something similar, where it's just a completely, automated system. You apply, you get a response a few hours later saying, yes, we accept it, and a couple of hours later, you got your approval, right? You flagged, of course, if you're a high-risk traveler, right? So you've got to develop the back-end systems to ensure that does happen. But we're looking at a fully automated ETA system to be done and operationalized and tested within the next few months going forward. I've spoken about this, but this is my last slide. As in local government, we're talking about a whole set of different interventions that's there. As you can see, we've got to keep it tight and narrow. The success of OVA that is not disparate. It's not all over. It's not a whole list of priorities. We sometimes do poor when we prioritize. We talk about 20 priorities. We talk about, when we talk about prioritization, it has to be very minimal and very focused and impactful. So we've got to work through some of these issues, and this is quite important. But if you look at the local government, it's about improving performance of water and electricity utilities. Spoke about that. Institutional structure of local government system and reviewing that. That's currently underway. Standardizing and professionalizing appointment of senior officials. And then, of course, the MFMA and funding, if we are going to bring in private sector into that to try and understand what implications that means. For spatial inequality, as I said, there are two focus areas, transport and human settlements. So returning all remaining passenger rail corridors to service. The peak, when our PRASA was operating at its peak, 600 million passengers per annum. So we've got to get to that 600 million passengers per annum, right? And that's where we've got to work towards. They've done exceptionally well in getting some of the corridors and stations back on again. And that's an ongoing work that we're supporting them around that. Again, demand-side subsidies to support densification of economic nodes. And then, of course, the title deeds. Again, a no-brainer. Title deeds allow those who own their assets, their house, to utilize that as a mechanism to go into markets, to borrow, to do investments. And that's quite an important part of what we see when we run these models around what people utilize their assets, their house for. If they don't have that title deed, it becomes quite, a bit of a challenge. And then review land use, building, and other regulations to allow for low-cost property development of people, social housing in particular, closer to where they work. Digital transformation, here it's a no-brainer. We'll do this, and hopefully we get this quite quickly done. It's the Broadband Access Fund, implement the digital transformation across government around digital ID and payments, and introduce a secondary market for spectrum, and we'll engage on that. So this is the work that we've been doing. It's a reflection of what we've done for the last 4 years, and a sense of what we're doing going forward, because we'll continue to drive that reform. We'll continue to have that cadence of transparency in reporting and holding account, and continue to work with departments and the private sector to be able to ensure that much of what we set out in the reform program and the ability for us to achieve is achieved through the second phase of over reform, with the president in the driving seat as the owner of this program, with the support of many of the ministers that are here and the ministers that are not here in the driving seat, and work with officials have been fundamental, particularly those in the two biggest entities, Michelle and Dan. Supporting the reform program has been fundamental. Thank you. Okay, do you want to take a photograph? I thought I was told to take the photograph.
Me?
I'm ready for the photograph, Minister, not like you.
Don't you want to take it with someone more important?
No, you're important, Sherman.
Thanks. From your lips. Thanks to Rudy Dix from the private office of the presidency, and I'm told that he will have breakout sessions after this plenary, so we'll take questions then, but not now. We now move to our only panel discussion in today's program, and they're all heavy hitters in the energy, minerals, and infrastructure space. The panel will seek to explore how the state-owned entities aim to address infrastructure gaps in energy and logistics, and the role of the private sector participation in building capacity to support government reforms. As you hear your name, please join me on stage. Moderated by the Chief Economist at Old Mutual Investment Group, Johan Els, please welcome CEO of Sasol, Simon Baloyi, the CEO of the Minerals Council South Africa, Mzila Mtenjane, co-CEO of African Infrastructure Investment Managers, Vuyo Mtoyi, Group CEO of Eskom, Dan Marokane, Group CEO of Transnet, Michelle Phillips, and the CEO of Corporate and Investment Banking at the Standard Bank Group, Luvuyo Masinda. Johan, over to you.
Thanks very much. Good afternoon, everyone, and welcome to the panel. Thanks very much. So yeah, we've had an impressive and golden thread of presentations before us. And as a South African, I'm very proud of what we've done and what we are doing, as you heard in all the presentations here. So that public-private partnership is what we're going to talk about here. If I take it a step back a few years, last year in this conference, there was a lot of hand-wringing about politics. It was 6 months or so before the elections. That turned out far better than what we expected. And so suddenly there's a lot of optimism and people are feeling better about themselves. But before it was quite fashionable, for some years at Old Mutual, we've been saying that there's potential for the economy to lift up from that annual 1% average growth that we've had towards 2.5%, 3%. Because in my opinion, that policy change that allowed the private sector to generate electricity, and now of course we know it's expanding in other areas, was, apart from the changeover from apartheid to a democratic society, the biggest policy change ever in South Africa. And as Governor rightly said, confidence is cheap. And the Bureau of Economic Research's survey around political concerns that have eased substantially after the elections. So we're building on that confidence, consumer and business confidence, less political risk, better growth would mean less fiscal risk. So yeah, I'm proud of the steps we're taking. But if we then move into the panel discussion, and what I want to start with, the private sector panelists here. If I can start with you, Mzila. What do you see the progress, this expansion of the role of the private sector? And I'm keeping the questions specifically broad so that you can express your opinion. Yeah. We want to keep it informal, and if anybody else wants to interrupt, you're welcome to do so. So what do you think about this process of bigger private sector participation, the role of government in allowing that, the regulatory reforms? Are things going along as you want them to go?
Thank you very much for the question, and good morning to everyone here. It's actually been quite overwhelming to sit and listen to the previous presentations. And I was saying earlier to someone that, you know, there are things that I'm hearing for the first time from my very own citizens, but that in itself has actually been encouraging because it's saying that there's a lot of work and effort taking place behind the scenes. And I think with the first opportunity to share all of that effort on this platform has really been encouraging for me. Secondly, if I can speak from a mining sector perspective, I think the value proposition for mining is pretty clear in that I think on the one hand, we produce products that the world is going to need, has needed, and will continue to need going forward. On the other, we're sitting with, I think what has already been mentioned, with huge fiscal constraints. And I think where the mining industry in South Africa comes is really as a solution provider in as far as the ability to produce the minerals and generate the revenue that government will require. And so the effort that we've been seeing in terms of government and private sector working together in terms of Operation Vulindlela has really been welcome. You know, it's something that we've been spoken about for a long time. And as a mining industry, we're not just a passive recipient of that effort, but we're actually quite involved and also a key enabler in that. We're involved in that, you know, we have several CEOs of the mining industry that are CEO leads in each of the crisis committees, the electricity, crime and corruption, as well as logistics. And then on the other hand, also an enabler, for instance, when it comes to some of the water infrastructure. What we're seeing emerging is that there's a synergy between the life cycle of infrastructure, such as the network infrastructure on water and electricity, with the life of mines. And so the presence of mining in 4, 5 out of the 9 provinces in South Africa means that the presence of mining is actually going to enable a lot of that infrastructure to be financed through, I think, appropriate, which is the operative word, appropriate tariff structures, be it in water, and I think later we can hear from Michelle also in terms of rail. So this is a really welcome effort, and we really are leaning into it very strongly as a mining industry.
Fantastic. Simon, if I can then head over to you as the other private sector participant here. What's your views around that? Do you think we're advancing fast enough? We've heard a lot about the progress that we're making in various fields. Are we heading in the right direction?
No, thank you very much. As SASOL, firstly, we've got touch points on all the critical sectors that were identified, being the energy sector, or the water or logistic. I mean, in all three of them, which actually needed reform, we having a serious touch point with the government. So I'll just answer your questions in a form of an example to show, I mean, the vision that the president has together with his cabinet when they started with these reforms. Because you remember, I mean, it starts with collaboration between business and government. However, it extends further into, I mean, private and public entities. So as SASOL, we've collaborated firstly with, I mean, Transnet to resolve issues, I mean, on the ammonia red corridor, where, I mean, we shared our expertise, I mean, both companies, to advance the maintenance of 138 ammonia rail cars. And that has allowed us to be able to transport more than 6,000 tons of ammonia into the market, which further goes into agriculture and the explosive industry for the mining industry. We've done that, I mean, with Eskom, as part of the initiative that Rudy referred to, Operation Vulindlela, we participated as part of business for SA under the NICOM, where we actually contributed our skills, I mean, under the leadership of the minister, and then, I mean, who is here, where we work together and work together, supported Eskom to make sure that we can, I mean, share the skills as part of the process of resolving the challenges that were there in the electricity sector at that time. But we went further beyond that, where we currently, I mean, have signed a groundbreaking MOU on gas, on LNG. As you know, gas in southern Mozambique is running out, and the country will need gas. You've seen the presentation by the minister on the energy mix, where gas will be also a portion of that mix, and we're working together with Eskom as well to make sure we can advance that. So if I'm thinking about the pace, I think you can judge the pace on the results, and I think the results are starting to show that we're moving at the right pace. We're seeing that advancement, I mean, under the 7th administration as well. However, this started, I mean, in the 6th administration. So this is the vision that we have as a country to, I mean, advance these reforms to make sure we support the economic growth that's required.
Yeah, and as Rudy said, nothing happens overnight, but the direction is clear. Yeah. So if I can then head over to Michelle, from your perspective as a state-owned enterprise leader, and both you and Dan fairly new in your current posts. So what are you focusing on in terms of unleashing those constraints and making sure that the economy can run? Because what you're doing is a huge important part, in my opinion, as important as electricity, in making sure the economy can run.
Thank you very much for the question, Johan. Interestingly, the gentleman, I was told I was the only rose. Thank you. The gentlemen on the panel here represent probably my biggest customers.
Yeah.
So we are critically, I mean, all of us involved in turning around the state-owned enterprises. Now, you ask about the pace, I have to say, and I have to do this because it's uncomfortable. In my opinion, the pace, actually, I would have preferred that it'd be a lot faster. But of course, we have to work with what we have. And there are a number of challenges that we have to get over. Rudy spoke about one, you are turning around a business. You have to focus on the tactical day-to-day things that you have to do. I mean, despite the slow pace, I have to say we have stopped 6 years of decline. Volumes in transit have been declining since 17-18. And for the first year in 23-24, we were able to show some stabilization. And yes, maybe not the increase that we would have hoped, but certainly a move in the different direction. The focus now is to continue to improve, optimize our assets, fix this network. In order to do that, we cannot do it by ourselves. We need our customers, other private sector partners who can then join hands with us so that we can get this network to the capacity that we expect it to be to enable this economic growth that we are talking about. So the 250 million tons that everybody is talking about, this ambitious target, and I've been told that maybe I'm not ambitious enough, but that ambitious target is an SA Inc. target. Of course, as Transnet, we do whatever we have to do to get the network to the right standards so that we can get private operators on it. Because by the way, if we don't get it to the right standard, the private sector is going to go through the exact same challenges that we are experiencing currently as the state-owned enterprise. So we have to get that to the right standard. That's the one thing that we're focusing on. And then getting private sector participants into our business. We need your money, we need your capital, we need your expertise, we need your innovation. We need you to help us optimize the use of these assets. We need you to help us improve the speed at which we operate. I think you know within government, generally we've got all of these processes. And I mean, right now, with some of the work that we've done together with businesses, we've been able to reduce the time that it takes for us to do certain things and to make decisions. So, I mean, those are the things that we're working on. Getting the
focusing on operational issues.
Operational issues
and the private
transforming the business together with the private sector.
Okay. How's that private sector role going? Are there blockages or are we going fast enough in terms of getting them on board?
So the interesting thing is that when you introduce competition, people will compete. We go to the market. We get private sector to show us what the interest is in the business. And I mean, you can see the example of Pier 2. We went to the market. Private sector partners are not necessarily happy with the outcome. We have to deal with those challenges as we move forward. We are hoping that these things will not hold us back, because at the end of the day, it is the South African economy that will be held back. Yeah. And we have to make sure that as we implement our processes, that we do that with the right level of transparency and openness so that it can withstand the scrutiny of even the courts. But at the end of the day, we are able to get the private sector partners involved in us improving how South Africa should be operating.
The key word I've been hearing today is partnership.
Yes.
So Dan, from your perspective, again, as I said, fairly new in this current role, and Eskom has improved quite significantly in terms of operational performance. What's your key focus? That or getting the other restructuring components of Eskom done, operational, or where's your focus?
Johan, the Eskom that I rejoined 9 months ago was already in motion in as far as addressing its operational performance is concerned, but also readying itself for the changing market condition. We are well down the path of unbundling. We have a transmission company unbundled to enable progress with regards to new infrastructure for renewables, as said, but we also had to attend to reshaping the Eskom of the future, what we refer to as Eskom 2.0. This organization is 100 years old. It has a significant role to play in the energy landscape going forward. So we attend to operational improvements, being very clear that the end destination is not the eradication of load shedding. The end destination is to create a comfortable platform operationally that allows us to be financially in a better position so we can start doing investments and taking and shaping the future of the organization. So what are we doing? I can also confirm that operationally, the progress that you are seeing is sustainable because it's driven on attending to the fundamentals of improving performance, and all our staff are fully behind this. They're energized. The minister indicated this morning, we've hit this morning one more record, and we continue to break these records now every second week going forward. The second aspect is beginning to reposition ourselves in terms of playing a role of transitioning our generation technologies going forward. We are very clear, but come 2030, we would have put in easily 3 to 3.5 gigawatts of renewables into our fleet. We'll be very clear in terms of a 22 to 40 gigawatt capacity of renewables that we will put in place, including nuclear, as we retire coal stations going forward, so that that mixture can go and approximate the estimate that we have shown you. We, of course, have also embraced the fact that as we resolve the financial sustainability, We will not go back to the levels of debt that we saw previously when we built infrastructure for the country, but we'll embrace participation with private sector players. And this is where investors like yourselves come into play. We are very clear that in all these opportunities, we will do private sector participation, PPPs and JVs. We have assets, we have land close to infrastructure of transmission. We will work together to also bring in skills to ensure that execution becomes very seamlessly. So we are a business in big transition internally, and also a business that is having to adapt to the environment around us. We have lots of work to do within our EDI. That space is requiring a lot of attention for financial sustainability. There's a lot of talk and reference towards the implication of our tariff application in as far as the economic growth is concerned. We are not insensitive to these numbers. We are very alive to them. We are very comforted by the response that we are receiving from the public broadly. We are encouraged by the fact that we think there's a good space for us to have adequate conversations around the sustainability of our business. There are 4 blocks that actually impact our financial sustainability. The tariff is one of them. The long-term debt resolution is the second one. The third one is the address of a sustainable address of our municipality debt. And the fourth one is within our control. That is around driving efficiencies in terms of our costs going forward. And that's been our focal point. We're going to have a discussion around all these 4 aspects. We'll make country choices that are sympathetic to what we need to do to go where we want to be without undermining the sustainability of the business. We are very convinced that we have the capability to continue to anchor the energy sector going forward, and we'll do this in a very different way that embraces participation of other players from the private sector. Thank you.
I'm very happy that you mentioned debt, because you said that's also a key focus. Michelle, while Eskom had significant government support, you haven't yet. So can you manage without?
We are on our knees.
You've got an extra guarantee, so you're still on your knees.
So we are certainly on our knees. We are praying for something good to come out of. There's a reason I was sitting next to the DM.
Okay.
But nobody's saying anything, so we're on our knees.
But as Dan is experiencing this tough love from Treasury,
I'm feeling it. I think I'm feeling it more tough than him. Okay. They've given me authority to go and borrow more money. I don't need more debt. So we have to earn, and which means we have to move volumes to make money.
So your spend in future is just on getting your capacity back on track. It's not expansion yet.
Well, we're actually trying to do both. As we are trying to restore the network, we are also trying to grow the network for future business. We've got a backlog, but we also have sustaining capital that we are spending. I mean, over the next 5 years, we need around 118 billion rand. That's why we are coming to speak to all these people with the funding, so that we can start, earning the revenue that we require to plow back and continue to invest.
These people with the funding will be as tough as Treasury, I suppose. So that's why you're doing what you can.
Absolutely. We aim to please.
So if before I go to the funding people, can I go back to Simon and Zilla? Are you happy with what you're hearing in terms of what Michelle and Dan's doing? I know you're working together with him already. Do you want more?
You go. Yeah, I mean, it's a tough question, but personally and as business, we're actually happy with what we're hearing. I mean, on the energy side, you hear Dan saying Eskom will remain part of the generation, but will also enable and work. The regulation, the ERA, the bill that Minister Ramokgopa spoke about, it allows the deregulation of the electricity industry so that private players can come in. We've seen the significant amounts of money that was poured into renewable generation by private players and the private partnership as well. Of course, that is a risk that needs to be managed, how you do that. So then always terms it, you cannot have an uncontrollable transition. So the rules of making sure that we transition, that should be, laid out. And
Sasol is already a huge energy provider?
Yeah, we are the largest, currently private producer after Eskom, but it's nothing compared to Eskom. It's only around 800 megawatts. So we do produce, most of our electricity and also procure around a maximum of 1.5 gigawatts from Eskom. So we're also a major user of electricity as well at the same time. So we're already in that space, and we're happy with the deregulation that we see.
Yeah, just to echo that, certainly it could be a lot quicker. But from my perspective, with the understanding of what I call the damage that was done in the past, some of which you probably will never understand, the pace that we've achieved so far, I think, has been fantastic and very encouraging. Secondly, as an industry, I think South Africa is the best place to be in as far as mining investment is concerned. If you look at what I call in my report to members, the magnificent 7 attributes of South Africa, some of which have been mentioned here, such as the capital markets, the endowment in terms of our mineral resources, I think a functioning democracy in terms of what you see. Look at all of that relative to other markets, and also, in fact, the infrastructure that we have, despite the challenges that we're seeing, these are actually providing for an enabling environment for mining. And as I've said, we're playing a big role in ensuring that we work together with government. The 22.5 gigawatts of electricity that was mentioned earlier, I think 75% of that is invested by the mining industry. And so the issue is that there's no alternative for us. But actually, in fact, if I can quote one of our members who said, South Africa is the best place to be, only if it wasn't so hard. And so, it's resilience.
We make a plan.
And I think we still see huge opportunities for South Africa. And I think we're seeing the light at the end of the tunnel. And with the the demand for critical minerals, the need for development on the back of mining, I think South Africa is the best place to be, and it will enable not only South Africa to develop, but also the region as well.
Great. Then moving over to the funding area, Vuyo, the company you from says it all in terms of its name, infrastructure investments. So in terms of public-private partnerships, how do you feel about this ongoing process, this evolving process? Are there opportunities? Is there enough funding? Are there enough investors willing to invest in infrastructure?
Thanks, Johan. Yeah, there certainly is an opportunity. If you look at the urgent requirement in South Africa, I think that's about $150 billion by 2030. So the opportunity is massive in terms of the requirement for infrastructure in country. From a sector perspective, I think the opportunities arise in the verticals that we're particularly interested in. Those include energy transition. So we're already a large player in renewables, and the platforms we've invested in collectively are around 2.5 gigawatts, so maybe a bit larger than Sasol if you look at them collectively. We are also a player in transport and logistics, and are a tenant of Transnet at some of its ports, and are playing quite a critical role in the transportation of some bulk material such as manganese, and we see a big opportunity there. We've been approached by mining groups, for instance, in respect of the PSPs. So we're also thankful for the direction that Rudy and the team are providing, in the sense that mining companies, notwithstanding the fact that the actual regulations aren't published yet, because there's sort of an indication of where we're going, mining groups are already organizing themselves and have approached us. I think we've seen 2 projects to date, which collectively are a $2 billion opportunity from a PSP perspective. So lots of opportunity there. Digital infrastructure is the other area where we see lots of opportunity, and we're already quite a large player in the telecom tower and the fiber space. I think critically though, and this is with foreign investors in mind, is that these are sectors where, due to the structural issues, the actual growth you can get from the investments is a multiple of GDP growth because there's a structural deficit. So, for instance, on data demand is growing at circa 40% per annum in terms of demand. So making investments in that sector generates growth that's well above South Africa's GDP growth. Similarly, on the renewable side, we believe that we can build out a gigawatt of renewables per annum. And that reflects about a growth rate of circa 20% per annum. And again, kind of that growth also offsets whatever currency concerns there could be, because you make up for any potential currency devaluation through the growth of the platforms that we invest in.
Yeah. So, Luvuyo, as representative of a big bank in South Africa, how do you see those funding issues? What funding options are there? What are the structures available to investors in terms of this huge funding gap that we sit with?
No, thanks, Johan. The first point I would make is that there is definitely supply of funding outstrips currently what is bankable projects.
Okay.
And bankable projects being the operative word. But as it relates to the direction that the country's taken, I think that what we've been able to do in the energy sector is a great lesson. In that, we've got a track record of delivering through the IPP program that we've done and the deregulation that we've seen in the generation of energy. So there's things that we've done which really points us into a great space. And we've seen as that deregulation happen, the amount of capital that's flown into that sector. So that's really positive. Some of the sectors are in different areas in terms of how close they are in terms of achieving some of these bankable projects. I think on the energy transmission, it's very interesting listening to both the Minister and the Deputy Minister of Finance in the direction being taken using the independent power transmission projects as an example. Because there are models that exist that work successfully if you think about Brazil. And the thing that's interesting there that will require to be resolved is obviously the regulation, number one, how you determine the tariff versus the cost of producing. So you need that to be aligned so that people can be attracted to come in. Also very interesting to hear about the use of leveraging some of the guarantee mechanism to make some of these, because that's always been one of the things that's been lacking. The other point I would make is it does require some innovation from the financial services in general. When I talk about the supply of capital outstripping the projects, that capital sits in many different places. It sits obviously within a corporate bank. It sits with people like Vuyo, who sits on billions of capital in their space. It sits amongst South African corporates who are ready to partner with the likes of Transnet, and it sits outside of the continent. Looking for yield coming into South Africa, and so things like sustainable finance are very interesting. And very well established and existing capital that could come into some of these projects because they tend to fit into that mold. Blended finance, leveraging both corporate debt all the way up to guarantees and the likes will be very interesting. And we've got a very well established capital market. We've got the JSE and using bonds where you can actually attract listed bonds. You can even attract retail type of instruments to attract some of this capital. So, there's definitely capital available there. We just need to move quicker on some of the regulation.
bring clarity on some of these models, but we're definitely moving in the right direction.
That's great to hear. Do you agree with that comment, or are you seeing the same, that there's more capital than bankable projects? Have you got any commentary around that?
I'd definitely agree with the statement. I think obviously you want an orderly market where kind of the nature of the private sector's participation is well defined, and you don't run into disorder. I do think, however, in some ways, you don't want to be reinventing the wheel. And we've already got, for instance, unsolicited bids are catered for in existing legislation. And to the extent unsolicited bids can accelerate the process of bringing projects that are in a way already structured and are bankable by the private sector, with a view to then being put out to competition. That could significantly accelerate, the pace of projects coming to market. So yeah, I think unsolicited bids is probably the way to go.
Dan, I wanted to come to tariff increases.
Maybe before you go there, now that the funders say there's lots of money around, just to give you a sense, to change the profile of our generation mix, as the minister showed earlier on, to 2035 will require, we estimate, excluding nuclear from an ESCOM perspective, will require about 1.4 trillion rands. For our corporate plan, which runs for the next 5 years, that will be some 500 billion rands of that, funded from our retained earnings, our improved performance generation-wise. It's putting us in a space where we can fund some of this from our cash from operations, but we'll need to go into some level of sustainable borrowing and also from private participation and partnership. So there is scope for us. We've made that decision that we'll go down this path, and so we'll be engaging quite substantially around it. Now you can talk about the tariff.
Consumers in South Africa, their biggest concern always is electricity price increases. Yeah. You've made a request for quite a big increase next year from the regulator. All of us hope you don't get it. What are the alternatives? I don't think you'll get it, by the way.
Yeah. Do you want to know what we think?
No.
Look, let me tell you this, and I think I may have mentioned it, maybe I passed through it very quickly. There are 4 drivers of ESCOM's financial sustainability. The tariff is one of them. What you're seeing in the tariff is also a catch-up that we have to do on some aspects that could have been attended to before. It's no secret that our return on our regulated asset base is sitting at some 1.6 billion rands, 1.6%. None of you will come and invest for 1.6%. We need to resolve these issues of unbundled tariff, as you're saying, so that we can also create an environment of certainty to attract investment into the country. And ESCOM cannot be treated differently from investors. Now that we're also going to have partners, we cannot be treated differently because we have to reward the investment in the capital. The second part is about dealing with the debt that's accumulated in the last few years as we build new infrastructure. There is a program that is successful, supported by National Treasury for debt relief. We are meeting the conditions for that. It's coming to an end in the next 15 months or so. Beyond that point, we have to continue to perform as we are doing now, operationally, so that we can relieve ourselves of the dependency on debt. But there's also the issue of the Munich debt. The municipality debt is growing at an alarming rate. We need to find a solution for that. We are ably led by the minister in terms of engaging the relevant ministries and stakeholders in COGTA and so on, to find a solution that is away from moving to the courts all the time. When we do that, together with driving cost efficiencies within the business, we'll then have a full solution. So you have 4 levers you can really press on in terms of the sustainability. we can make some trade-offs. It's important that we do so from a country perspective of making choices. What we have demonstrated is that when ESCOM's financial security is clear, we can get it to perform to support the country's electricity support. We dare not go back. And so we have a very important conversation to have in the next few months.
So that creates an issue. You need the money. The consumer is not willing to give it to you. There's an issue. Simon,
we need to find the money. We need to find the money one way.
Yeah, absolutely. You guys from Sasol or Minerals Council, have you got ideas around this? How do we solve this dilemma?
It's a tough one from a mining industry perspective, because this is one issue which talks to the competitiveness of the industry. Now, where we sit at the moment is that, you know, the structure of the mining industry is changing. We've got gold that has been mined for over 100 years in the country. It's been showing quite a steep decline, and it's a huge energy user. And with increased electricity tariffs like that, that's just going to accelerate the decline and eventual demise of the mining industry. That then puts huge risk on the platinum industry, which is one of our biggest employers and one of our biggest exporters. And it's also a commodity which is firmly in the realm of a conversation around beneficiation, which is another important issue for consideration as far as electricity prices are concerned. And so I think it's going to be important that we do come to some kind of arrangement in as far as, I think what Dan often refers to as what is in the cost reflective tariff. Because, you know, if we don't come to an arrangement, that poses a huge danger to the viability of the industry. And then if we're planning for critical minerals going forward in as far as how we maximize, as the minister said, that natural endowment that the country has, you know, those minerals are going to remain in the ground, and we're not going to be able to take advantage of that. So I think the conversation we're having outside of this room regarding what Minister Parkstall calls the mining energy industrial mix is an important one. And I think the issue of the tariff is going to be at the center of that conversation in terms of enabling mining and enabling beneficiation and enabling industrialization of the economy. So I haven't given you a specific response in terms of what we could do, but I think all I can say is it needs to be an ongoing conversation.
Absolutely. I think it's a difficult one, but we need to fix it. As Michelle has also said, she also needs money. And not to pick on Transnet or ESCOM, there are issues. I think the public at large would say you need to cut costs. It's not always that easy, I understand, but there are issues around us, and as you say, we need to fix this. Simon, have you got anything to add to that?
No, I think water still needs to flow under the bridge. so negotiations and discussions must be ongoing, because you have to find the balance between what ESCOM needs and also not hamstringing the whole economic growth in the country.
The finance guys, Vuyo and Levuyo, have you got any comments around this issue about tariffs? And ESCOM and Transnet needs more money. We got the private sector coming to invest in these industries, but at the moment we need to fix their finances.
I agree with Michelle. Transnet doesn't need more debt. No. Because also whatever debt you have, it needs to be sustainable, and you need to be able to service it. And therefore, the option actually of accelerating on leveraging the assets that Transnet and all SOEs has in bringing private partners is actually, you know, as difficult and complex it is probably the path to go, rather than getting more debt, because it sounds like the minister is not going to give you money either, Michelle. So yes, we'll hear something on Wednesday, because you either need equity to make that debt sustainable, or you need to leverage the assets which sits on your balance sheet, and by bringing and crowding the private sector to, one, raise some liquidity, and two, to assist in bringing capacity and technical capacity as well to improve performance.
Could I very quickly maybe try to respond? So the issue of tariffs, I mean, we need these institutions to be strong and robust, because the rules need to be very clear. There are accepted tariff methodologies that apply. It's gone through, so many cycles of public participation processes. So once there's an agreement on the tariff methodology, those of us who need to apply it have to comply with that methodology. So the methodology will spew out, and I'm saying spew with a pun, but it will throw out a number. The regulator is obligated to declare a tariff that the market can bear. The debate around tariffs is something that has to happen. It happens annually whenever you go and apply. And you're always going to put in a number that the methodology requires you to ask for. Now, the regulator is not always going to give you your costs. In fact, probably 90% of the time, they don't give us the cost that it takes for us to run those businesses. They would look, for example, if you have invested in your assets, what have you invested in that regulated asset base, and then are you entitled to that return? So it is a good thing that there's debate about tariffs, because it shows that people are concerned about the things which impact them. Ultimately, if we've ensured, and we have to do it within that framework, if we start having other arrangements outside, we have to make sure that the regulator is strong and robust to be able to say, this is what the market can be, and therefore this is the number. Transnet has never wanted to be dependent on government for any funding. This is the first time, I've been in Transnet for 25 years, that I've had to go to government to go and ask for financial support. We've always gone to the markets, borrowed. We were supposed to have borrowed responsibly. And yes, maybe some people did not borrow responsibly. And now we're sitting in a situation where we're at. So for us, the objective is to, again, get out of having to be dependent on government for financial support. It's not how we want it to be. We want to be able to go to the markets. We want to be able to generate cash from our operations and reinvest that into our operational activities. That's ideally how we want to work. Dependence on government for guarantees. I mean, I'm sitting with 33 conditions. It's not how you want to run your business. So it is important for us to get out from under that.
Thanks. I'm not going to ask for questions in respect for time. They are around, you can stop them. Perhaps very briefly, concluding remarks. We start at the end with you, Simon. Just what do you take from this? How do we take this forward?
Yeah, Johan, I'm quickly, just going to quote one of the sentences or paraphrase something in Nelson Mandela's book, where Long Walk to Freedom, when he was concluding, and he said, when you climb a mountain and you reach the top of a mountain, you realize there's many more mountains to climb. So I just want to conclude by saying there are challenges, in South African landscape, but we see all of those as opportunities. We have demonstrated, I think, as government and businesses. I stand here representing 140 CEOs that have signed, again, the relaunch of phase 2 of, this government business partnership to accelerate the reforms to allow us to grow the economy. And there's a reason for that. If you look at the unemployment in our country, we've got a young country, 65% of the people are of the age between 35 and 40. So it's a very, very young country. And the unemployment rate is 33%, one of the highest global. So we do need to grow the economy. We need a much higher rate. We currently, you hear the governor talking about 0.9, that can be 1.1. 1.1% is not going to change the unemployment rate. We have to go to the 3-4%. And in order to do that, all of us have to keep the price on reforming. We have to continue with the reforms. We have to make sure that we create a conducive business environment. And finally, for all the capital people, owners of capital in this room, I also want to ask you to come and partner with us. Partner with the companies in South Africa, partner with the government, because all of us are ready to work with you to create a future and a hope for our people.
So what you say about Mandela and his book is something that we see every day on bicycles when you're riding. When you're riding up a hill, don't expect it to be the end. There's another hill coming up.
True.
But I think from my perspective, it's certainly been very encouraging to look at the intensity of effort behind the scenes in terms of what government has been doing. My biggest area of focus whenever listening to government is that I'm hearing a lot in terms of the fiscal constraints, the cost cutting, and not much in terms of the revenue generation. And this is where I believe the mining industry can actually play an important role within the constraints of the infrastructure that we have. And it's a sector that does need to be protected and promoted as much as we can, because as I said in the beginning, we're producing a product that the world needs, and it will pay a market price for it. We're well positioned as a country to be able to supply those products, and that's going to provide for revenue generation, which will support the fiscus. And so I think with that focus on that revenue generation, I think that's going to be, that's something that I'd like to see happen. And I think it will come through in time.
Okay, thanks. Maybe going back to the tariff question, and I think the general theme is I think the more you introduce competition, and this is the private sector participations, etc., the less challenge you have with regulatory tariff setting, because there's a competitive process and you're getting kind of the most efficient pricing for the service that's being provided to the public. So would really encourage that increased participation of the private sector in the infrastructure space, and we're certainly heading in the right direction. Again, congratulating the presidency and kind of our combined business groups for the work that's happening in taking, well, almost the same sort of theme, bite-sized chunks out of the problem, which is kind of a wicked problem. But I think with the likes of ourselves, ready to partner with both government and SOEs to resolve the problem, we see ourselves as a conduit for both domestic and international capital in solving our infrastructure shortfall. So, yeah, looking forward to the opportunities that arise from the next steps in our reform program.
Thanks, Michelle. Briefly.
Well, I mean, we're open for business. We've adopted a reinvent for growth strategy in Transnet. We want to partner with the private sector. We've embraced the reforms. We are opening up this industry. I mean, at the end of the day, I'm a very proud South African, and I'm a very proud Transnetter. Very proud Transnetter. And I mean, our purpose is to move people out of poverty. That's what we seek to achieve.
Right.
Johan, this is my first attendance at this conference, but I think from the sessions this morning, including this panel, there should be an appreciation that there's more focus and bias towards execution, delivery, implementation of plans, and I think that is what is really going to eventually bring more investor confidence. There's evidence behind some of the things that we've announced. We're moving in the right direction, and I can assure you that we'll accelerate the pace from here onwards. Yeah.
Thanks, Livuyo.
Yeah, I mean, just to echo Dan's comments, I'm also very encouraged because, when I listen to Dan, Michelle, Rudy, there is real tangible progress that's been made. And similar to Vuyo's comment, I mean, we're ready to play the role in curating the capital to the right projects that's available to support the execution of these, of all of these projects, to achieve, proper sustainable growth for South Africa.
Absolutely. Thank you very much. I think that the common thread of us wanting to work together, no matter whether you're in the public sector or in the private sector, that's fantastic. Governor and Chris, you at the bank did a study some years ago about this link between confidence and growth. If we continue to fix confidence and we continue to have less risk going forward around infrastructural issues or politics or policy or fiscal issues, then we can lift growth through that improved confidence. I thank you very much.
So while they take photos, let's thank our CEOs and our moderator, the Chief Economist of the Old Mutual Investment Group, Johan Els. And Johan has informed me that he will be available to meet one-on-one once this session concludes, so please take that opportunity up. We are running about 20 minutes late, so let's get to our next speaker before we go to lunch. It's the second keynote address of the session, focused on the communications and digital technology infrastructure roadmap for South Africa, and delivered by the Minister of Communications and Digital Technologies, who was appointed as part of the Government of National Unity. He has served as a Member of Parliament for the Democratic Alliance since 2014, has held several shadow cabinet positions, and has served in the DA's national leadership as Deputy Federal Chairperson since 2023. Please welcome Minister Solly Malatsi.
Thanks very much, Program Director, to all the dignitaries here, the Chairperson of the Reserve Bank, the Chairperson of the JSE, my fellow colleague in the Cabinet, Dr. Ramokgopa, and to my former lecturer and the Deputy Minister of Finance, David Masondo. I needed to make that disclaimer so that you know that everything I may say might be attributed to him. I'm a product of his well-learned skills. But on a most important note, it's truly an honor for me to join you here today to address you on key areas that are vital to the roadmap for communications and digital technologies in South Africa. So I'll cover broadly three areas that are key to the portfolio that I now have the responsibility of leading. And those will be premised around the importance of digital transformation of our economy and society, where we are in terms of the priorities that we have outlined for the current administration till 2029. And for each of these priorities, we'll also be able to present big bets, which represents the areas where we believe there are the most opportunities and the key reforms that are necessary to be able to leverage the potential of the ICT sector in our country. The National Development Plan set South Africa the goal of achieving 5.4% average annual GDP growth and reducing unemployment from a level of 24.9% in 2012 to at least 6% by 2030. What the Government of National Unity now has is the responsibility to make sure that we put tangible measures and interventions in place to be able to achieve these targets. The digitization agenda is by no doubt going to play an enormous role in trying to achieve this role. And from our digital economy master plan, we have identified that the contribution of South Africa's digital economy ranges from anywhere between 2% and 19% of the gross domestic product. So the Department of Communications and Digital Technologies has the task of leveraging digital technologies to accelerate change across government, the economy, and society. And I believe that there are four key areas that we need to double on in order to close the digital divide, to drive economic growth, and to create the sustainable jobs that our people need. And one of those is ensuring that there's universal access to the internet. Secondly, that we empower people with the digital skills they need for a digital economy and society, and enabling productive use of digital technologies. And lastly, creating a supportive environment for digital investment and innovation. The first priority, as I indicated, is universal access. So we are committed to achieving universal access to affordable, high-speed internet with a particular emphasis on connecting homes and schools, because we believe this is where the largest population of our people are, particularly those that remain outside of the digital space, so that they are connected. There's a very well documented positive and significant relationship between increased internet access and GDP growth. And by some estimates, 10% increase in broadband penetration is correlated with an increase of 1.3% increase in GDP for most developing countries. And as of 2023, 78.6% of South Africans had some form of access to the internet. This is largely driven by penetration of mobile phones of households that have access to the internet via a mobile device. In comparison, we have 14.5% of households with a fixed internet connection. Looking at schools, 20% of our schools have an internet connection that is suitable for internet and learning, while a total of 80% of public schools only have access to basic internet connectivity. The majority of these schools are connected using 3G or LTE that is not ideal for teaching and learning in the digital environment that we live in. This underscores the push for meaningful internet connectivity because to have access alone is not sufficient. It has to be meaningful, it has to be reliable, and it has to be sustainable. So we are in the process of finalizing strategic plans that we aim to set ambitious targets in these areas because we have identified broadband internet connectivity as a foundational pillar of our country's digital transformation journey. It provides the necessary infrastructure for digital inclusion and enables other sectors of government to effectively deliver on their mandates in areas such as education, public health, and public safety. And to achieve true universal connectivity, our strategy has been built on 3 key layers. One is international connectivity through submarine cables, national connectivity through terrestrial cables, and last mile connectivity through a combination of fixed and wireless solutions. Each of these areas present opportunities for further investments, for further development and reforms. But we are fortunate as a country because South Africa is the landing point for several major submarine cables which provide the backbone for high-speed international connectivity. These submarine cables not only connect our nation to the rest of the world, but they also position South Africa as a regional hub for digital traffic on the continent. Key infrastructure developments include the 2 Africa submarine cable, which will strengthen our international bandwidth and improve our connection to Europe right through to the Middle East and the rest of the continent. Once completed, the cable will provide a significant boost to internet speeds and redundancy, ensuring that our digital infrastructure remains robust and resilient. But we are also witnessing further investments with the Equino cable funded by Google, which will enhance South Africa's international connectivity, which will also enhance our country's international connectivity by improving reliability, the capacity of our data centers, and supporting industries such as finance, media, and cloud computing. And while we recognize that international connectivity is crucial, the national terrestrial fiber networks forms the core of our domestic broadband infrastructure. And to this end, our goal is to connect every corner of the country, ensuring that citizens, regardless of our location, have access to high-speed internet connectivity. There's currently 15% of the South African population that is outside the boundaries of digital connectivity. And that is where our obsession is in terms of bridging the digital divide. South Africa's major telecommunications operators, ranging from Telkom, Liquid Intelligent Technologies, and Mavis and others, are investing heavily in our fiber infrastructure. These investments are expanding the national backbone with links to major cities, towns, and regions to one another, therefore providing the seamless communication across our country. On the other hand, terrestrial fiber is also being extended to underserved and rural areas through both public and private-public partnerships. Programs like the SA Connect, which is government's flagship program of connecting communities, are integral to ensuring that critical institutions ranging from schools, hospitals, clinics, including traditional authorities, are equipped with the necessary bandwidth to perform essential functions. And to complete the whole broadband ecosystem, we are ensuring that last mile connectivity by bringing internet services directly to end users, particularly in remote rural areas. This is perhaps the most challenging part of completing the connectivity puzzle, but one where a range of innovative solutions are being initiated. And it is being led by the Fiber to the Home program with solutions that are being rolled out in high density urban and suburban areas, providing high speed, reliable internet access to homes and businesses. To this end, we have OpenServe, a subsidiary under Telkom, Vumatel, and FiberTime as some of the leading service providers that are playing a key role in ensuring that fiber connectivity reaches households, empowering families, entrepreneurs, and SMMEs to engage with the digital economy. On the other hand, Rain, Vodacom, and MTN are also leading efforts in rolling out 5G networks, which are said to revolutionize last mile connectivity by offering faster speeds, lower latency, and increased network capacity. Additionally, in this day and age, we realize that we can't ignore the push for market competition and freedom to the end user by ignoring the prospect of satellite broadband services playing a critical role in connecting the most remote regions of the country, particularly where even wireless network struggles to reach. These services will ensure that no one is left behind, particularly in areas where traditional terrestrial and wireless solutions are impractical. But it is essential that it is done in a manner that promotes equity, that promotes fairness, and that which is done to increase competition and ultimately give the potential internet user the freedom of choice. Affordable data and smart devices are also critical for achieving internet access and usage of data. The results of research, such as the one that has been conducted by the World Bank on device affordability, indicate that in many countries, considering supply-side cost savings for entry-level devices may be attainable via reductions in taxes and import duties. Combined import duties and other national taxes, such as sales tax or value-added tax, can represent close to 30 to 40% of the consumer's total device cost. And in a country that is pushing for more digital inclusion, we've identified that there are barriers to entry, and affordability of smart devices is one of these. So we're engagements with our colleagues at Treasury to say, how do we look at measures of reclassifying smart devices as a luxury good? Because in reality, in this day and age, a smart device has become a basic instrument of communication to everybody else. So while we reconcile that with the need to make sure that the fiscals have sources of revenue, we must also reconcile it with our broader ambitions of saying we want to get South Africa digitally connected by 2030, and to be able to drive more and more people by empowering them to have the means to afford these devices. Where are the areas of opportunity where we can reduce the burden on the potential buyer so that it becomes less costly to be able to afford these devices, because they are essential not only for entrepreneurs to compete in the space, but also even for learning purposes. There's a big push in our country about e-learning. And the reality is that to have the kind of penetration that we need, you need smart devices in the hands of school learners, in the hands of entrepreneurs. But cost is a major obstacle to that. And while that might not be an immediate solution, it is key that we are having the right conversations about reducing the burden on users of smart devices, because it can be that we continue to accept that it's a luxury good when it has become an essential instrument of communication. But providing connectivity on its own is only part of the solution. Our second priority is to ensure that South Africans are empowered with the skills to make full use of the opportunities of digital technologies. It is through targeted digital skills program that we aim to empower our citizens, especially young people, to actively participate in the digital economy, whether as employees, entrepreneurs, or innovators. The International Telecommunications Union has grouped digital skills into three broad categories. First being basic digital skills, which are the foundational skills that are necessary to perform basic tasks that enable many people to function at a minimum level in society using hardware and software and conducting basic online operations. Secondly, are intermediate skills, which are the skills that are necessary for using digital technologies in a far more meaningful and beneficial way, such as critically evaluating technology, creating content that enables people to perform work-related functions, such as desktop publishing and digital graphic design. And lastly, advanced digital skills, which are those that are required by specialists in our ICT professions, such as computer programming, network management, including working with artificial intelligence, big data, and the Internet of Things. A recent study which assessed the skills and demand supply in the digital economy in our country also included a survey of enterprises and organizations in the private sector. And the study shows that 80% of the report, or 80% of corporates report that their employees have basic digital skills. Only 10% report that their employees have advanced digital skills, which shows the amount of opportunity that there is to equip not only the working force in the private sector, but also in the public sector with the advanced digital skills that they need to make more of the opportunities that exist in this digital world that we live in. So in order to enable wider usability of digital technologies, the government has begun implementing a national digital skills and future skills strategy, which has identified the priority digital skills for the country in line with international trends and also national development objectives. And while we'll continue to ensure that our national departments of education and higher education produce the skills that we require, we are also committed to making South Africa an attractive destination for skilled professionals and to make it easier for local businesses to recruit internationally. Skills within the public service are also crucial, and we have engaged in a series of partnerships to upskill our public service with the necessary digital skills. One such program is an initiative that the Department of Communications, together with the Local Government Association, has with the British High Commission. The program aims to empower municipal managers and councillors to steer the deployment of broadband infrastructure. The online curriculum of this program covers areas such as smart city development, governance, the policy and the regulatory frameworks governing the rollout of broadband and rapid development strategies, so that there is standardization across municipalities and a sense of continuity and stability. And closely linked to skills is the third priority, which is around enabling productive use of technologies. South Africa has one of the highest internet usage rates in the world. While we know that many South Africans are online, using the internet for social media, the key emphasis is wanting to increase the productive use of the internet in areas such as e-commerce, e-banking, e-government, and e-learning. And data from the Research ICT Africa shows us 98% of South Africans use the internet for social networking. This represents a significant gap between the other top three user cases, which includes entertainment at 59% and online banking at 55%. Less than 30% of South Africans use the internet for shopping, 24% use it for government services, while 18% use it for education or on learning instances. And I'm sure Rudy spoke about the efforts that the presidency is doing in leading an interdepartmental working group to develop a much more comprehensive and implementation roadmap for developing South Africa's digital public infrastructure, focusing on three pillars of digital identity systems, digital payment systems, and also exchanging digital exchange systems. In terms of data centers, what we are doing in this end is significantly driving the demand for data centers, primarily due to the growing need for storage, processing, and analyzing vast amounts of data. So we are positioning the country as a leading hub for data center infrastructure in Africa, driven by the growing demand for data services, digital platforms, and big data analytics. And over the past few years, the country has witnessed some substantial investment in data centers, with local and international players establishing strong presence in South Africa. And to name just a few, we've got Terraco, which has emerged as the largest data center provider in South Africa, expanding its hyperscale data center with the opening of new facilities. and Equinix, which is a global leader in data center infrastructure, developing its first South African facility. And lastly, Vantage Data Centers and Africa Data Centers have also been expanding their campuses on the country. What this shows is that data center investment are not only critical for supporting digital transformation, but also expose the rise of hyperscale computing that is necessary for our country. These facilities provide the foundation for high-speed processing, cloud services, and data storage that are essential not only for business, but government department and institutions. But for all of this to happen on a consistent basis, a key part of the strategy is to ensure that we create a policy and regulatory framework that encourages both investment and fosters innovation by making sure that we are clear, we are consistent, and support policies that aim to further attract the investment and stimulate innovation in our country. And one of the most significant regulatory achievements in the most recent has been the successful auctioning of high demand spectrum in 2022. This spectrum licensing was critical in reform that aimed at improving mobile broadband services, supporting the rollout of 5G networks, and ensuring that South Africa remains competitive in the global digital economy. And in the next few years, in consultation with the regulator and Treasury, we'll also be looking at the secondary market for spectrum because it's an important opportunity as we consider our different options in the next few years. We are also increasingly positioning South Africa as a hub for data centers and computing. And we've introduced regulatory reforms to facilitate investment into this area, premised on two things. One, ensuring compliance with data sovereignty and cybersecurity regulations. And secondly, encouraging investments in renewable energy to power these facilities in line with our national sustainability goals. And I know I'm standing between people and lunch, so I'll wrap it up quickly. But what we have identified in the very few months that we've been in is that it's been encouraging seeing the response not only of the industry, but also just the renewed sense that there is now a focus on execution and getting things done, which is what I think South Africa has been yearning for a high time. So I believe we are on the right track, and I think it's going to take a lot of collaboration between government, between the business, between the ICT sector, in order for South Africa to remain a key player in this sector. And I think it is appropriate to conclude by reflecting just a bit on the temperature within the GNU. I think there's broad recognition that as imperfect a union as it is the best possible step for South Africa to be on the path of prosperity that the promise of 1994 was. And any union that brings together 10 political parties, more so in an environment where coalition governing at a national level is still in an infant stage, is always going to have moments of tense policy contestation, particularly in the very early stages. And I think sometimes when this happens, we often forget that this government of national unity has only been in place for 3 months. So we are all finding ways of adjusting to governing together with compromise and governing with consensus. But what is of no doubt is the fact that we all realize we've got a collective responsibility to make sure that the government of national unity succeeds. So it's going to require that we all have cool heads and short toes to make sure that we work for what is in the best interest of our country at all times. And we are committed to making sure that happens. Thank you very much. Do I stay for questions or? Oh, okay.
But the minister will be available for one-on-ones after the plenary. So I beg your indulgence. We've made an executive decision. We're not going to break for lunch now. We're going to do the last interactive session before we break for lunch. So another 20 minutes, if you don't mind. In this discussion, we speak to the leader of South Africa's second largest party, formerly the official opposition and now a key member of the government of national unity, as we seek to better understand how decisions are made in the multi-party structure and the key priorities to grow the South African economy. He served on the eThekwini City Council for 10 years before moving to the KwaZulu-Natal Provincial Legislature after the 2009 elections, where he was elected leader of the DA caucus. He then took up a seat in the National Assembly in 2010 and was later elected federal leader of the Democratic Alliance in 2020. John Steenhuisen now also serves as the Minister of Agriculture in the Government of National Unity, and it is my great pleasure to welcome Minister Steenhuisen, who joins us from Cape Town. Minister, good evening to you and good afternoon from us here in New York.
Good evening to you from South Africa, and good day to you in New York. Great to be with all of you today at this important event, and thank you for the opportunity for the interaction.
So, Minister, let's deal with the elephant in the room, shall we? How would you characterize the early days of this multi-party coalition called the Government of National Unity? It's not been without its teething problems. You've been in the news this week, as have some of your colleagues, which was probably expected, right? Given that you were in opposition to each other, and now you're in bed with each other. So how's it going?
Well, I think it's going a lot better than most people expected, if I'm completely honest. And I think people must temper their expectations of what would occur in similar democracies around the world, where 10 parties were to come together and start to try and meld together a common program. And of course, you're going to have a period of settling in and finding each other. This is the first coalition government in 75 years in the country that's as a result of an electoral outcome. And so it is the first coalition in 30 years as well in South Africa where one party does not have a majority. And so it is new territory at a national level, certainly, for all of the parties involved. And there will be a period of settling in, and of course there will be disagreements. And I think that those are natural. But I certainly think that South Africa is a lot more positive and optimistic place than it was before the election. The Economist magazine described South Africa the other day as having a lacquer vibe. And I think they're right. I think people are looking forward to a future of real hope, opportunity, and possibility. And I think it's up to all of us to make sure that those expectations are met.
And you'll agree, Minister, that disagreements by their very nature need to be resolved. I wonder how those mechanisms are working in this new iteration of government.
Well, we've started with a new mechanism, which is going to be called the clearing house, and that's going to deal essentially with disputes as and when they arise, but also then hopefully down the road try and preempt any particular disputes. Having traveled to Germany and other countries in Europe, as well as some in South America and others around the world, coalition governments require a continuous dialogue between the partners, a real effort to find each other behind closed doors, preferably, and to have controlled explosions when there are disagreements, so these can be managed in a mature, open, and non-confrontational way, so that we can find each other. As I say, this is new territory. The ANC are learning that they are no longer a majority party. The Democratic Alliance is learning we're no longer the official opposition. And by force of destiny and electoral result, we are thrust together and we have an opportunity to either make it work or not. And I think that by overwhelming majority on both sides, and I think the parties want to make it work and want to make the GNU work.
Policy coherence, right? I mean, we're in the context here in a room full of investors, so policy coherence matters. How you resolve your disagreements matters. We've seen some policy disagreements around certain legislation in South Africa, the Bella Bill, which is a reference to the Basic Education Laws Amendment Law. I would argue the National Health Insurance Law also exemplified some policy fissures. We've seen some stresses in terms of South Africa's foreign policy positions. These are very practical examples about what things in terms of coherence that you both seek. How are those specifics being dealt with?
Let's check in there with a conversation that is currently ongoing. In conversation with our Agriculture Minister, John.
We're back in the room, Minister. If you could please go ahead.
Well, as I said, I've no doubt that they will arise, and I think it's how these are dealt with. And I think that if mature level-headedness can prevail, we will get through them. Yes, there are some policy differences. You would expect nothing less with 10 different political parties that have had to come together now. But I believe that in all these instances, we all agree on what we want to see for South Africa. We want growth and we want jobs. And we want an economy that's inclusive and that is able to build a better future for more South Africans. Now, of course, once you understand that those are the shared objectives, there will be some disagreements from time to time on the best means to achieve these. But I'm very confident, incredibly confident, that through that mature dialogue, through structured mechanisms to deal with disagreements, and an attempt to try and prevent them from blowing up onto the public arena, that we will be able to find a way forward to ensure that we are able to bring the stability that the South African economy needs going forward. Because frankly, the alternative to the GNU is so ghastly to contemplate that it behoves all of us to understand what is required from all of us, and that this is a historic moment where the best of South Africa is now required to come to the fore to ensure that the worst of South Africa does not prevail.
Minister, in that context, what can you say about the renewal of the African Growth and Opportunity Act and South Africa's continued inclusion therein, right? The act comes up for renewal next year, and efforts we have seen from some US lawmakers pushing for a review of the bilateral relationship with South Africa over its foreign policy positions, that at times is different to that of the policy prescriptions that the United States seeks to achieve in the world. I wonder how important AGOA is to South Africa, and particularly the sector in South Africa that you now lead.
I was about to say to you, you're asking a very loaded and biased question. As the Minister of Agriculture, AGOA is incredibly important and has been a huge support to a large number of agricultural institutions and operations in South Africa. I believe that AGOA should be renewed. I think that the reality is that if the United States wants to retain a form of influence on the continent, that it needs South Africa. We are one of the largest economies and certainly one of the major players. And I think it is important that good mutual relations exist between the two countries. And AGOA, I think, is a real sign of goodwill between the two countries, that we can cooperate and work together. Now, again, much like in a coalition environment, of course, as trading partners, we won't agree on all of the things all of the time. But I think that where we can work together to agree on the majority of things most of the time, that is the sweet spot where you want to be. And so I think that South Africa needs to look at the world a little bit more pragmatically. And I think that the United States should view South Africa as an important player on the continent, and that the two require each other in a symbiotic way to be able to succeed in advancing the interests of both of our countries going forward.
Minister, one of the biggest challenges in South Africa is unemployment. Do you believe the structural reforms, and we've had a very lengthy discussion here in New York on that very aspect today, mainly in the network industries of electricity, infrastructure, water and logistics, and broadly creating an economic growth-friendly environment are enough to deal with this challenge, or are there extraordinary interventions needed? What's your perspective on that?
Well, I think that we've got the bones of what is required going forward, but I do think we need to accelerate them. I think the incredible gains of Operation Vulindlela and the realization that public-private partnerships are certainly a sustainable and good model to use going forward, we now need to accelerate them. I think we've spoken for far too long in South Africa about some of the deep reforms that need to be made, and these have certainly come to the fore in the discussions around the medium-term development plan, which will guide the 5-year term of the new government. And the first opening steps in that will be unveiled this week by the Minister of Finance in the medium-term budget policy statement. I think that investors, as well as future-forward observers of South Africa, should take great heart with what is going to be announced in the medium-term budget policy statement, and certainly what is contained in the medium-term development plan. I think that the bones of a major structural reform of South Africa and its economy, and our drive to hit 3% of growth rate is contained in that document. And I think it does signal a very clear understanding that it cannot be business as usual in South Africa, and that we have wasted far too long over the last decade and a half in, quite frankly, silly and unhelpful conversations as a country, and that we all need now to buckle down. The builders need to make sure that they come together at the rational center of the political spectrum and join hands and work shoulder to shoulder to ensure that those reforms are made. I think the reforms will signal very clearly to investors, both locally and abroad, that this is a government that is actually serious about getting things done. And I think if you look at the work that's been done in the first 100 days of the government of national unity around visa reform, around making sure that we curtail spending, and that's going to be reflected in the medium-term budget policy statement, that we're serious about things like debt and dealing with debt, that we're serious about getting off the grey list, and that we're serious about becoming a welcoming place for people to invest in. I think it's going to start to change the tenor. And the billowing out of the sails that you've seen on the ship of state on the back of sentiment post the 2024 election is going to turn into a prevailing wind of reform that will fill out the sails and steer our ship into the waters of prosperity that we know lie ahead if we take the right decisions.
So when we talk about 3% growth, 4%, 5% is some of the numbers we've heard in the room today, in terms of really being able to address South Africa's systemic unemployment levels, what do you see as foremost priorities within the Department of Agriculture that can buttress and support that growth?
So obviously a massive expansion of existing and new markets for South African agricultural goods. Looking at our existing partnerships like AGOA, like the SAEU trade arrangement, like our existing trading agreements with other countries, and looking at them and saying, are we really deepening and widening the full opportunity that those offer? And then seeking new markets for South Africa's agricultural products. Because when you pull the demand, it immediately increases the opportunity on the South African side. Now, if one looks at the shape of South Africa's labor and unemployment, we have an expanded unemployment rate in the high 30s, low 40s. The large majority that are young, unskilled or underskilled South Africans. Now, there are a number of ways you absorb that shape of labor into work. And of course, one of them is industrial processing. The other is tourism, but the other one is agriculture. And I believe that agriculture has certainly held up its own in terms of its contribution to GDP over the last 6 to 10 quarters, and it will continue to do so. And I think the more attractive we can make South African agricultural products around the world, the more markets we're going to be able to open up. And the more markets we're going to be able to open up, the more we're going to stimulate job creation and labor absorption at the local farm level, but also in the agro-processing sector. So I see agriculture as a major contributor, not only to economic growth, but to dealing with the unemployment crisis in South Africa. I think there are huge opportunities that lie there, and I think that with a government department of agriculture that creates the right enabling environment that goes out to assist both small and large farmers to succeed, improve production, improve quality, that we'll be able to find even greater markets for South African agricultural products.
Going to open for questions in just a moment, but to take us there, let me ask you a question about the G20. Of course, South Africa takes over the presidency on December 1st. The country will host a major summit of heads of state and government next year. And yes, we won't get clarity on the guest list until after the US election, so we'll wait for that. But what do you see, sir, as some of the key priorities? We talked a little bit about how Brazil had focused on food security in its one-year term. What do you see as key catalytic priorities in that regard?
Well, certainly from an agricultural perspective, the G20 offers us a huge opportunity. And Brazil have demonstrated how a country can use a G20 presidency to the advantage of that particular country. And we're able to, within the space of the presidency of the G20, by making hunger, agriculture, precision farming, and support for the family farm the cornerstones of their G20 presidency, ultimately leading to the launch of the International Alliance Against Hunger. They have been able to demonstrate what we can do. And I think we can do it in a number of sectors in South Africa during our G20 presidency. Next year is the International Year of the Woman Farmer. And certainly the theme that we'll be carrying through from the Department of Agriculture into the G20 would be the role of youth and women in farming in South Africa, from subsistence all the way through to your mega farmers, and how we can improve on participation of both women and young people in the agricultural sector. And so there are huge opportunities, I think, that exist for South Africa in the hosting of the G20. And I think that's why President Ramaphosa is rightly taking it incredibly seriously, and has certainly challenged his cabinet to go out there and look at innovative ways for us to be able to ensure not only we have a successful G20, but that the legacy of the G20 in South Africa will be felt for many, many more years to come.
Minister, I'm glad you mentioned young people, right? I mean, historically, young people have been very reluctant to get into the agro-processing, farming sector. I wonder how your department is working to encourage more young people to work and come into that space.
So part of the programs that we have are bursary systems for younger people to go into the agricultural space, whether it's through animal sciences, whether it's through plant sciences. It's also around information days at schools and other places where children who are about to leave school are graduating. But it's also about skills transfer and being able to go into communities and encouraging young people to understand their link between themselves and the production of food. It is a travesty that in a country that has such rich and abundant natural resources that we have malnutrition, wasting, and dietary and food insecurity issues around the country, when we have an abundance of fertile agricultural land. And so it's through that we encourage younger people to consider farming and at the agricultural space as a potential career. And agriculture has moved far beyond just planting something in the ground and watering and hoping it grows. There's a whole tech industry that has developed around agriculture. A lot of the precision farming is managed through very, very high-tech infrastructure and technological advancements. The biological advancements around agriculture as well, from new breeding techniques to how do we maximize yields, how do we ensure strains that are more resistant to climate change, which is a big effect in the African context. These are all exciting industries in which we're hoping to attract more young talent, and obviously revamping and improving the agricultural colleges, and also explaining to people the career paths that exist in agriculture that are far beyond working with implements in a field, but actually involve economics, involve mathematics, involve geography, involve biology, and a whole host of other disciplines.
Minister, bear with me for just a moment. I want to scan the room. Are there any questions in the room while we have the minister online? He will not be available for one-on-ones. The minister in Minister Ramaphosa has a question, so we'll go. Not a question. He wants to make an intervention. Can we get a microphone to the minister, please? Stand by, Minister Steenhuisen. We have Minister Ramaphosa who wants to take the floor.
No, it's not a question. I just want to amplify a few things so that they mustn't be lost in translation. So the first one is on the mechanisms to resolve areas of differences. So first thing is we have accepted as the partners that there's a constitutional architecture in the country, and whatever mechanism that gets to be introduced must not erode or undermine the constitutional architecture. So the idea of a clearinghouse should not be read to be undermining the constitutional architecture and not usurping the powers of cabinet. Cabinet still has the final decision on what constitutes the direction of the country. The second one on AGOA, we have agreed that the single point of reference in engaging with our treasured relationship with the US will be led by Minister Pakstau, I mean, after the introduction of the seventh administration, the very first trip to be undertaken by a minister of the seventh administration within 48 hours of the life of the GNU was to the US to clarify, allay fears, and ensure that there's convergence and consensus in relation to some of the interventions we're making. And then the penultimate point I want to make is earlier on in my presentation, I've made the point that the seventh administration has agreed on 3 priorities. I said is inclusive growth and job creation. The second one is fighting poverty and reducing the cost of living. And then the third one is on an ethical, capable and developmental state. And then what we're doing now to fashion that in a programmatic fashion, we do something called a medium-term development plan, which is a 5-year articulation in detail what it means for us to achieve those 3 priorities. And then the last point I want to make, we have agreed last week in Cabinet on what constitute the 3 key priority areas of South Africa's leadership of the G20. The first one is inclusive growth, employment, and fighting inequality. The second one is food security for all. And the third one is on artificial intelligence and innovation for sustainable development. So what I'm saying is that we have agreed on the apex, and then there are work streams that will then departmental focus, the issues I raised about energy. But at a higher level, what President Ramaphosa will be championing is essentially those 3 areas. So I thought that the addition is important so that there's an appreciation that we have coalesced around what constitute the priorities for the 7th administration and what constitute the priorities for South Africa's G20 leadership. Thanks.
We have a question over there. Could we just move the mic, please? I'll come to you. So we've got 2 more questions, Minister. Steenhuisen, just stand by. Please go ahead.
Good morning, Minister. My name is Chris Opperman. I'm with C5 Capital. And we are promoting nuclear investments into South Africa. In Washington, we are promoting the idea of a reset of the relationship between South Africa and the United States based on the fact that the government of national unity is a new government. You will be aware that we've had some disagreement with regard to our position with regard to China and Russia. And so it's very important that we, as an investor community, get an understanding of how foreign policy is determined. And so a question that I've got is, how does foreign policy get formulated within the government of national unity, and how is it then projected to the world?
Minister Steenhuisen?
Yeah, thank you very much. I don't want to get into trouble when I answer this, so let me be careful. And again, thank Minister Ramaphosa very much for his supplementary comments there. And I think he's right. We've coalesced around what those priorities are, and what remains to be worked out now is how we get there. As it relates to foreign policy, I think that we agreed in the statement of intent that South Africa would continue to pursue a non-aligned position, and that continentally the Africa program, AU 2063 program, would be our guide on the continent. I do think that the 7th administration is a different administration to the 6th administration, and that we do need to have a discussion at a cabinet level, and this is where Minister Ramaphosa and I will concur, that this discussion can only take place at a cabinet level about what is South Africa's national interest, and how is that national interest best served and expressed in a foreign policy environment. And I think that conversation is certainly scheduled, and we already know that Minister Lamola is preparing documents to bring to cabinet so that we can have a full and proper discussion on what is our national interest and how do we locate it in the world. And that, what flows from that will determine our foreign policy going forward. But certainly from the statement of intent and the work to date that we've done on building the GNU, it has been on a non-aligned position where we focus on North, South and South-South cooperation, that there's no need to choose one over the other, and that it should be not a case of either or, it should be a case of and that we should have good relations with all partners around the world that offer us an opportunity to invest in South Africa, but also offer us an opportunity to bring South African goods to market. And I think that that will iron itself out in the coming weeks and months. And I think we must also be careful that we don't catastrophize differences of opinion on various matters. I'm not sure about the fourth estate in the USA, but certainly the fourth estate here in South Africa do tend to catastrophize things sometimes. And just because there's a wrinkle of disagreement, it's suddenly going to be the end of the GNU. As I've said very clearly, the alternatives to the GNU are too ghastly to contemplate from an investor perspective, but also from a socio-economic perspective and a governance perspective in South Africa. And so it does behove all of us to iron out these wrinkles and to work hard to make sure that as the builders in South Africa, we continue, as we have done since the election, to hold the middle ground, to hold the rational center, and to work pragmatically and in tandem to be able to resolve the issues that face South Africa going forward. So, yes, there will be wrinkles, and we will try and deal with those as best as we can. But foreign policy will be determined by the cabinet decision and will flow, no doubt, from the discussion that will be led by Minister Lamola within cabinet.
Minister, I can absolutely confirm for you that the fourth estate in America is far worse than the fourth estate in South Africa. We have one more question from the floor, but just to make a housekeeping announcement, we know that one-on-one session should have started already. We are running about 15 minutes late, but they will start immediately as we conclude after the next question and response. Sir, you have the floor.
Thank you very much, Minister. Igor Arsenin, UBS. My question is, we had a very interesting session earlier on public-private partnerships, where you have the representatives of all the major SOEs and private sector. In your view, how much progress has been made in this area since you entered the government? And kind of how do you see this partnership evolving and improving? And what needs to be done from your point of view, and how likely it is going to be achieved? Thank you.
Sure, thank you very much. I think it would be wrong to start from the election. I think there has been some incredibly good work done prior to the election in Operation Vulindlela that was begun by the president and which started to yield fruit. And I'm sure everyone is familiar with, as a result of Minister Ramaphosa's presentation, about the enormous progress that's been made, the fact that we're now, I think it's over 250 days where we're load shedding free in South Africa. And that cannot be underestimated in terms of what it means for industrial production and for business confidence in the economy. I think the decision that we've made as the seventh administration is to accelerate now the public-private partnership model that succeeded in Operation Vulindlela, and to make sure that it's accelerated on some of the key bottlenecks in the South African economy, largely around logistics, port logistics, and also dealing with some issues at a municipal government level that are holding our economy back and are proving to be a bottleneck. So what I see over the next term, and certainly the impression that I have picked up from within my interactions, both in cabinet and in the MDDP discussions, is that we're going to see an acceleration of the public-private partnership model, and we're going to see a great deal more effort being made from both the business and the government side to find these synergies where we can work together. The reality is that government in South Africa does not have the capital at this stage, and we hope you're going to help us out with that, to be able to do everything we want to do. And that is why we require the private sector to come on board and assist with expertise, with new financing models and partnerships in improving efficiencies and effectiveness of this key infrastructure. And so I think that, to answer your question, I think you're going to see a rapid acceleration of this openness towards partnership with the private sector that was begun in the 6th administration, but is now also gaining acceleration in the 7th.
Minister, let's wrap with this. And the fourth estate aside, do you believe these energy levels, the enthusiasm we're reading about, Bloomberg has a story out every week, talking about the optimism and the renewed levels of interest in South Africa in terms of, certainly from an investment perspective, do you believe these energy levels of optimism can be sustained? And do you plan to see the next 5 years through in the government of national unity?
Well, let me ask the second question first. Yes, absolutely. We wouldn't have entered into a governance arrangement if it was not to go the distance for 5 years. We know that South Africa needs 5 years of solid, stable government if it's going to be able to start to turn around the things that need to be turned around. I certainly think that it can be sustained, provided that what follows very swiftly after this initial sentiment is real reforms and a setting down very clearly the markers and the roadmap forward that would give investors the confidence that this is a country that is serious about getting our economy growing in an inclusive way, creating jobs and combating poverty. And I think once those markers are laid down in the medium-term budget policy statement, when the medium-term development plan comes out, that the vigor and the drive from these markers is going to be enough to sustain the enthusiasm and in fact accelerate it to a different level. Because in South Africa, we're very good at talking. We haven't necessarily always been good at doing. But I think what you're going to see now is a new government energized, vigorously trying to move the needle in the service of the people of the country, because we understand that if we don't have a growing economy, we won't have jobs and we won't have inclusive growth. And that is why it's absolutely essential that these reforms are now laid out very clearly and that we move as quickly as possible to achieving the targets that are set out in the medium-term development plan. I'm up for it. My colleagues are up for it. And certainly the experience I've had in cabinet is that everyone around the table is up for it. We want South Africa to succeed. We know what her potential is. And her economy, her future is worth the fighting for. And I think that's what's driving all of us in the GNU.
John Steenhuisen, the Minister of Agriculture and the leader of the Democratic Alliance, thank you very much indeed. And John Steenhuisen brings us to the conclusion of our plenary program today. Thank you for all our interlocutors, all the CEOs, all the government ministers, the wonderful moderator you had today. Thanks, everybody. Let's break for lunch, and then you can go into your one-on-one sessions. Thank you so much.